Good morning, everybody. Welcome back to another episode of the Market Open. It is Wednesday, March 5th. We are here after Trump's first State of the Union, which was last night, even though it wasn't literally a State of the Union, but it basically was a State of the Union. We got a lot to talk about in terms of what happened with that the State of the Union, so we'll be talking further and analyzing that. We have Howard Lutnick, who just gave us some comments 3 minutes or 3 seconds before I went live, that are shaking up markets, and you guessed it, it is about good old tariffs. So we will talk about that. We got a new deal from Palantir. We had one deal yesterday, another deal today. First time in 2025 where we had two deals back to back, and this one's actually a pretty big deal. So we'll be talking about the implications of that deal, what it means for the broader markets. And we have jobs data, which, yeah, I forgot we had jobs data in the morning, even though you guys told me last night we have jobs data coming up, ADP private payrolls, and your boy woke up and I had no idea until literally a minute before that we had jobs data. So we're going to talk about the jobs data because it's not good. Market's not really tanking on it, but it's not good, which means the market kind of believes it kind of doesn't. So we'll analyze that, go through the implications of it, and see what it means for the broader equity markets as well. So let's get started. Thank you, everybody, for being here. Oh, and on top of that, you got China, which is ready to retaliate on the trade war. I mean, that's just that goes without saying. They had some new updates this morning, so we'll be talking about their retaliations because they are not slowing down, but that'll happen, when we analyze the broader tariff war that Mexico, Canada, China, and the United States are now engaging in. Okay, cool. So let's get started. Thank you, everybody, for being here. Good morning. We've got private ADP payrolls that came out this morning, 77,000 for February. We have non-farm payrolls tomorrow, which is pretty much all the jobs. Private ADP payrolls are not always the most accurate, but they're like the best accurate version of what we have in terms of private sector growth. Market wanted 140,000. We came in at 77,000. That's not good, right? Like that. There's no way that can be good, in my opinion. I don't even know how to spin that to make it sound good. I don't know what positive spin you can put on that, but the market wanted 140,000 jobs. We came in at just over half of that. Tomorrow we get non-farm payrolls. The market wants about 150,000 in those non-farm payrolls. If private payrolls weren't that good, I don't know how we're going to hit the number that the market wants tomorrow. This is a 7-month low on private payrolls. So this is the lowest we've seen in 7 months. And obviously it shows, in my opinion, that there is some weakening of the labor market that is pretty undeniable. I mean, to deny that the labor market is starting to get weaker would be to kind of deny what you're looking at right here. Again, market wanted 140,000. Last time we had 186,000. So this is a pretty dramatic decline from the 186,000 we had in January. Now that could be a little bit seasonal. You can make that argument as well. But yeah, 77 versus 140. I mean, that's just not a good number. Now, what does that mean? Well, as Cole says right here in the chat, sounds like 3+ rate cuts. And this is exactly what we talked about yesterday with Chris. The more pressure there is on the economy from Trump with tariffs, which creates uncertainties and gets people to buy up bonds versus equities because they're afraid of equities for rightful reasons, right? Because of this tariff trade war. Bond yields go down as more people buy up bonds. Another reason for people to buy up bonds is if the labor market starts collapsing, and I wouldn't say the labor market's collapsing, but it's definitely not showing signs of massive strength because now you have the bond market say, okay, the Fed's definitely going to cut. And if the Fed's definitely going to cut, let's lock in our yield, which will get those bond yields to come down. If you look at the percentage chance of rate cuts from May, this number was 25%, the 400 to 425 target rates in basis points. Now it's at 45%. So that's up basically 20% in a day, or I should say in an hour after this job data came out. And the market is now definitively pricing in 3 rate cuts. We might get one earlier than June. The market is now thinking by June, there would be a 49% chance. So greater than, or just under 50%. Yesterday, I think that number was like 47. And then in July, the market is thinking there's a 40% chance we get that cut as well. So it wouldn't surprise me if we start in June, but if we keep getting some crappy numbers when it comes to the labor market and we start to get this 10-year to continue to come down, let's take a look at the 10-year right now, 4.202. It's not at the lows that it was at yesterday, but it's still down. Then that is an argument for why we would get more rate cuts. Now, are rate cuts good for equities? Yes, because equities become more competitive with a 10-year that probably is not going to yield you 4% if we get rates to continue to come down, mortgage rates come down, etc. But if we're cutting for the wrong reasons, aka people are losing their jobs, this is the thin line that the Fed has to balance. And obviously that could be an issue that hurts equities as well. So that's what we've got going on right now. Now, one catalyst for private payrolls is that all these government workers that are starting to get laid off, the IRS announced yesterday that they are looking to downsize by 50%. 90,000 employees in the IRS. I didn't even know we had 90,000 employees in the IRS. By the way, I got my tax bill for my CPA yesterday. It was more money than I've ever paid in my life in taxes. So there's going to be now 45,000 employees. You would imagine those 45,000 employees are enough to make sure that everyone's paying their taxes, but we're going to see what happens this tax season. It looks like in the next 2 months, based on the report I read yesterday, they're looking to downsize that 90 to 45. Will that happen? We'll see. But those would be 45,000 people that would probably have 7 to 8 months of severance to live off of, right? And it would probably be a 7 to 8 month delay before they get a new job. Also, the transition from the public sector to the private sector might not be that easy. Like if you're an elite, just like worker, you can probably transition. But if you were in a public sector job that maybe was not as demanding or did not give you as many skills to work in the private sector, that's going to be a transition. So that could create even more unemployment as government workers lose their job, which makes the overall unemployment number look horrible, which could lead the Fed to be cutting rates and the 10-year to come down as well. Or that could lead to a transition of a lot of jobs if the rotation from public to private sector happens relatively quickly. We just kind of don't know how that scenario is going to play out, but it does look like we are going to get more unemployment from the government sector as they are starting to downsize. And this is basically what Trump said yesterday in his State of the Union. S&P 500 reacting to that news. We do have some red candles right here. We were up, I think, about 0.4%. Now we're up 0.07%. Nvidia was up about 3%. Now it's back at 117. That's up 1%. It is green, which is nice to see, but still it is getting a little bit of a hit from this jobs data. Palantir is up 1.86%. We'll talk about their new deal that they got. MicroStrategy's up a little bit. Bitcoin's holding up. The broader markets, I mean, Bitcoin was above 90,000. Now it's at 89,006. So not too much of a retrace, but this jobs data, as bad as it sounds, 77,000 versus 140, it's not tanking the markets. And I'm happy it's not tanking the markets. I kind of think it should be hurting the markets a little bit more, but it's not, which is nice to see. Same thing with the negative GDP growth that we got 2 months ago, or not 2 months ago, two days ago, with the negative 2.8% versus negative 1.5%, a doubling of the contraction in the economy, and the PMI data and the ISM data that we got that was all contraction, all of those metrics below 50. You got bad PMI, bad ISM, bad jobs data today, and then bad GDP growth. All of that pretty bad, but it's not like tanking the market. Again, the stock market down about 2% year to year on the S&P. Like that's not horrible, right? So I don't know. This is definitely crappy data. It's not crappy data enough to get the market to tank. And maybe that's just because people feel that equities still will be the best performing asset versus even with all this crappy data, or they believe rate cuts is going to allow the market to sustain itself. But obviously not the best news in the world, but not destroying the markets, at least right now. Bad news is good news for rates again. Yes, I agree. There is obviously a part of the market that probably believes in that, and equities would become incredibly competitive with the 10-year if rates do come down meaningfully, with money market funds as well. We had 60 billion of inflows last week to money market funds. We're probably going to get another massive increase in money market funds tomorrow when we get that data because people are scared. Well, the easiest way to get people to stop being scared is if you reduce the rate of return they're getting risk-free and get them to take some risk. But to do that, you need something to technically break. It hopefully doesn't break and cause a recession, but something does need to break. And this is basically what Scott Bessent, Trump, Howard Lutnick have been saying over the past couple of months. I mean, at this point, whatever they're saying, we should just listen to and take it seriously, outside of them threatening tariffs, because that's never serious. But in terms of what they want to do to create volatility, to get that 10-year to come down, to then refinance a lot of the debt. We talked about that with Chris yesterday. That's probably something that they're very serious about. CrowdStrike right here, down 6.7%. For anyone who's wondering why CrowdStrike is down, they had amazing net new ARR, amazing growth, amazing EPS beats on the top line, amazing revenue beat, amazing cloud security, which is another part of their cyber cloud security, which is a different part than their overall cybersecurity product. They added another $200 million to that business. Everything was great. The problem was EPS growth for fiscal year 2025. The street wanted $4.45. They came in at $3.35, $1 below what the street wanted. So when you miss by $1 on EPS expectations and you're trading at a 700 PE, yeah, you're going to get hit. Now, down 6% to me is relatively tame. I'd be interested to see how bad it gets in the market open, or if people just buy this dip. But the fact that CrowdStrike is only down 6% after missing by $1 on EPS expectations, and if it recovers when the market opens, just shows you how much people, A, love CrowdStrike, or B, are not willing to get rid of CrowdStrike to buy the 10-year. because they just rather be in something that is objectively expensive. Like CrowdStrike is one of the most expensive SaaS names outside of Palantir, simply because they think there's better growth opportunities and there's a premium they should pay on growth versus buying U.S. debt. Or they think CrowdStrike is sandbagging. But the point is there is still risk on appetite in the United States. The fact that Bitcoin is still at 89,000 also demonstrates that we are not absolutely getting destroyed when it comes to liquidity issues. Speaking of risk on, let's talk about what is getting some people to be a bit more risk off when it comes to tariffs. So we talked a lot about tariffs yesterday. On the market close, this is what Howard Lutnick said on Fox Business, which pretty much got stocks to run up after hours, but also made people feel that no one can trust what this administration says when it comes to tariffs.
He's going to come out today angry that Americans are still being killed. Now, both the Mexicans and the Canadians were on the phone with me all day today trying to show that they'll do better. And the president's listening because, he's very, very fair and very reasonable. So I think he's going to work something out with them. It's not going to be a pause, none of that pause stuff. But I think he's going to figure out, you do more and I'll meet you in the middle some way. And we're going to probably be announcing that tomorrow. So somewhere in the middle will likely be the outcome. The president moving with the Canadians and Mexicans, but not all the way.
Just to clarify,
So why does that matter? Why is Howard Lutnick basically saying the opposite of what he's been saying for the past couple of weeks matters? Well, yesterday at 12 a.m. or 2 days ago, the 25% tariffs on Mexico and Canada went into effect. You had Justin Trudeau do this big press conference saying how sad and upset he was about this. China came back. We have some updates on what China said today, but they retaliated with 20% tariffs or 15% tariffs on soybeans and other agricultural goods. Then at 5:30 p.m. yesterday, 4 hours before the State of the Union, Lutnick comes out and says, yeah, we think we're going to get a deal. And what does somewhere in the middle mean? Well, Nick, no one knows, but it definitely means that the harsh 25% tariff against two of our biggest allies, Mexico and Canada, feels like it's not necessarily going to stay for that long if some type of compromise can be done. I'm a little skeptical about this because if this was just like an act of political theater and there was always going to be some type of compromise and this was just done for the sake of being done, why would Trudeau host a 2-hour-long conference discussing like how upset he was at this? Was that also just for show? Or like, was he also serious to fight back? Because why wouldn't he have just called Trump and be like, look, I get it. Like, let's work out a deal. But like doing an entire press conference, I don't know if it's just him trying to sound super cool or something, but it just seems like a waste of time if a deal was going to get done. So I am very curious today to see if a deal actually gets done in the context of Mexico and Canada. I don't think there's going to be a deal with China. That's not what Lutnick mentioned, but he did mention with Mexico and China or Canada, there is a good chance that they meet somewhere in the middle. Maybe later today, we'll get that update. That's also why the market was up last night, because they were anticipating, all right, so there's not going to be tariffs. If there actually are tariffs and there is no deal definitively, then we could see some volatility to the downside. China's U.S. embassy today said if war is what the U.S. wants, be it a tariff war, a trade war, or any other type of war, we're ready to fight until the end. That's just a warning to America to remember that China has nukes. That's basically what they're saying right here. They're like, hey, like, if you want to have a tariff war, we'll have a tariff war. But then they put in that other sentence or that other part of the sentence or any other type of war, basically saying, hey, if you want to go at it, buddy, we've got nukes too. We've got a nice red button. We're not afraid to press it. And we're ready to fight until the end. Obviously, China is trying to seem very dominant in front of their citizens. The harsh reality is China can't afford these tariffs. China's economy is much worse than Canada and Mexico. The only reason people are buying Alibaba is because Xi Jinping is starting to embrace capitalism a little more. Without his public embracement of capitalism, Alibaba would be back at $50. And without his massive stimulus, Alibaba would probably be even below $50. So like their economy is in no place to negotiate or have any leverage, but China wants to be seen as the leader of the world. So they're going to try to fight back as aggressively as they can. That just leads me to believe that there's going to be so much butting of the heads when it comes to China and the United States, like there was in 2018, which tanked the markets, but it did create a trade war between the two nations. Eventually, a deal will be reached by the end of 2020. We had a deal with China. Now, it took a year and a half to get there. I hope it doesn't take a year and a half this time. But yeah, I mean, eventually we're going to have to see a deal. The point is, Mexico and Canada, we might get a deal soon based on what Lutnick said. China, I don't think we're going to get a deal soon. I'm just curious at this point, does the market call this bluff? Does the market actually believe that we're going to get tariffs or not? And I guess we'll see. But so far, every time we've been threatened with tariffs, a day or 2 days later, we don't get those tariffs. And I guess we're going to have to see ultimately if the tariffs end up becoming reality. So that's the update we got on tariffs. It's like every day we have to talk about tariffs, but we do. I think for the next at least 5 to 6 months, we're going to be talking about tariffs every single day. I don't think this is going away anytime soon, especially because Trump ran and campaigned on tariffs. So kind of makes sense we're talking about it more and more, but it looks like they're serious about implementing it. And then it looks like they're not serious about implementing it. So what it looks like is that they're serious about talking about implementing it, getting people riled up, and then maybe implementing it and maybe not. You guys think it'll go for 4 years? I don't know if it'll last for 4 years, bro. I hope it's not going to last for 4 years. I would think like in the next 4 months, 6 months, this stuff gets resolved and they get some deals done, because everyone's economy is too fragile, including the United States, to not be able to get a deal done. I mean, this is different from 2018. 2018, obviously we had a fragile economy, but we hadn't printed $7 trillion in 10 months and had massive inflation. Like, this is just a totally different world post-COVID. So I would hope in the coming months this is resolved, but maybe it is an entire year to deal with this stuff. All right, so that's what we got in the context of tariffs. Quick update on Robinhood, since a lot of you guys are talking about it. So Robinhood is doing a couple of things today. First of all, I'll be live on the market close at 4:45. Robinhood is hosting some quiz game. They got this guy to do a commercial for them. I'm not gonna lie, I don't know who this guy is, but apparently he's a big deal in the quiz world. Scott Rogowski or something. That's the guy's name. Scott Rogowski. Does anyone know who this guy is? He's like the quiz daddy. That's what his name is. So this is the commercial they put out yesterday.
Let the countdown begin.
Okay, I'm not going to keep it going because the audio is probably going to get copyrighted. But that's so at 4:45, they're doing this quiz daddy thing, and they're giving away $1 million in Bitcoin. So very similar to the New Year's Eve giveaway, where you had to be a gold subscriber, and if you were on the app, you got a part of $1 million of Bitcoin, or 5 million they did. And if there was like 100,000 people there, everyone got $8, which is cool. I think I love this idea because it's innovative, it's marketing, it's keeping people engaged. It's NVIDIA, by the way, back to 116. It is something that's exciting to get people to just constantly care about what's going on in the product. And I'll be live at 4:45, so I will engage in the quiz thing. Wow, you guys know who this guy is? Dude, I saw this commercial last night. I was like, who the heck is this guy? But that's what the preview looks like. So that's what's going to happen. The guy hosted a big show 5 years ago. He's the Mr. Beast of quizzes. HQ is a classic game. Yeah, I don't know nothing about this, dude. The only like quiz, like, are you smarter than a fifth grader? That quiz, was that a quiz game? It was a game show kind of, but it was kind of a quiz game show. That one I used to watch when I was little. I don't know who this guy is, but it looks like he'll be hosting some quiz thing tonight. So what are my thoughts on this? I think it's great. I think Robinhood continues to get people freaking excited about the product, and they continue to make people feel like you want to be part of the overall journey. I did buy more Robinhood yesterday. I bought more stock. I bought more options. Now I bought more stock and options for primarily this reason. Vlad went on a conference yesterday, and he said 3 things that were really important. And these 3 things just got me even more excited to continue to buy the dip, because obviously we're down 30% from highs. Number 1, he said on futures, we just finished launching futures to 100% of our customers, and it's been growing incredibly well. It's at a faster ramp than index options and exceeding our expectations. Before launching it, we thought it would be a 9-figure business, and what we are seeing is giving us a lot of confidence, which is incredible because index options are already ramping at a $15 million annualized run rate. If futures are ramping faster than index options, that means it's very close to becoming more than 15 million. And obviously, as that keeps growing, that can get to a $100 million business, which is their ambition. So I really love that they were able to show that progress. Number 2, on gold subscribers, they had 2.6 million at the end of Q4. Robinhood, which is down right here in the pre-market, 45.70, now has 3.1 million. They added 500,000 gold members in 2 months, 250,000 a month. Last year, this time, they could barely add 60,000 a month. So, I mean, you are getting incredible amounts of momentum when it comes to those gold subscribers. And that's I would say 95% margin business, $5 a month from 3.1 million people annually recurring is really nice to see. And then finally on net deposits, he said for the first 2 months into Q1, we've hit 10 billion in net deposits, which is again pretty incredible. 5 billion a month last quarter. This time they were doing about 3.4 billion per month, so showing strong year-over-year growth in terms of net deposits. More and more gold subscribers means more and more people want to engage with the platform, want to trade, want to take out margin, want to engage in these quiz tactics for marketing, want to check out the credit card, and obviously want to deposit money in the platform, which is the lifeline of a financial services company. Can you get people to take their money out of their trusted banks and put them into your platform? And that's what Robinhood continues to do. Final thing I'll say on Robinhood is he also mentioned the institutional revenue opportunity is greater than the retail opportunity. They're having a lot of discussions with institutions on how to provide services for them that are akin to the types of clearing services they provide for retail. If Robinhood starts building a B2B side of their business, that's a lot more sticky, a lot more stable, not really concurrent on market volatility, but is more of like a SaaS business that is just based on providing a service to the big guys, that could be a really nice diversified part of the business that I've been waiting for, because obviously the consumer part of the business is very volatile given it's based on market conditions. So yeah, every update I got from Robinhood yesterday was great. Could Robinhood go back down to the low 40s if we get like a real market correction? Absolutely. I've been saying that for a while. It could definitely happen, but they have their gold event coming up in a couple weeks, and I think they're going to introduce a lot of new things along with these updates that they talked about yesterday. So yeah, I think Robinhood continues to show that Q1 will be strong. What leaps did I buy? I bought the $9,500 spread for January 2027. That's the spread I bought. So it's not an outright leap. It's covered with that $100 call, which means Robinhood basically I'm betting on a double in 2 years, which again, it doesn't need to literally get to 95 for the spread to be profitable. But I think with S&P inclusion, with the growth that they're showing, unless 2026 is a full-on bear market and all of their growth slows down, which is possible, I don't think that's necessarily going to be the case. Even with a 6% S&P 500, 7% return in 2026, I still think there's enough innovation, enough product updates, enough diversification of the business where they continue to grow. So I do think that is possible over the next 2 years. But I bought more stock than options. I mean, I'm just continuing to load up on the shares at this point at these levels. NVIDIA right here, 115.99. So you do have, or 116.50. So you do have a little bit of green in the pre-markets, but we were red. We were at 120 last night. Trump talked about the CHIPS Act, which kind of got NVIDIA to go up. I don't know exactly why that got NVIDIA to go up, but that did get NVIDIA to go up, which probably transitions us into our State of the Union coverage that I'll talk about now. Looks like we have an update right here from Cactus Jack. Supreme Court rejects Trump on U.S. aid, foreign aid freeze. Supreme Court reinstates order requiring foreign aid payments. Wow, that's a big one. Okay, so the Supreme Court is not letting Trump freeze the foreign aid that the country has been giving out. I think he did that via executive order, if I'm not wrong. And it looks like they're not letting that happen. I can't say I'm that surprised. It kind of felt like the Supreme Court would challenge that. But that is definitely not good for Trump, because obviously he's been wanting to save money and not spend all this money we're spending on aid, especially foreign aid. And so that's why he instituted that executive order freeze. Looks like the Supreme Court just said, no, you can't do that. You know, this happened a lot back in 2017. If you guys remember and you were following the administration, I mean, they tried to do a lot of stuff, and every other day, it's like some 9th district appeal court from Texas would be like, nope, you're not going to allow that to happen. Like, you don't need to be just a Supreme Court judge to have a checks and balance on the executive branch. You could be a district appeal court judge, especially in a high ranking. But obviously the Supreme Court is like the highest ranking, and if they say no, then you can't do it. So it looks like Trump's plans to try to save some money from freezing foreign aid, that's not happening. That's not happening. Oh, wow. Is the dollar tanking on some of this labor market news? Wow. Holy crap. Look at the dollar, guys. 104.85. We didn't even see that when we looked at the 10-year. Wow. This is low. This is the lowest it's been in 4 months. This is the lowest it's been in 4 months. That theoretically could be good for Grab, Nubank, and Mercado Libre, as foreign exchange currencies have been a headwind for them. We get that sucker below 100. That definitely is not the worst thing in the world. Obviously, there's some bearish ramifications of it if it gets too weak, but it's been hot for a while. I mean, it was at 110 at inauguration, so it's nice to see that one coming down a little bit here right now. All right, State of the Union. So what happened at the State of the Union? First of all, thank you to everyone who joined and was listening to myself, Chris, Matt, and Dougie's coverage on the on the State of the Union. In general, my thoughts were that it was funny at some moments. It was boring for the majority of the half of it. Like I kind of low-key fell asleep during it. Like it was just, I don't know. It was one of those things where whether it's a Democrat or Republican, they're just going to be bragging about their accomplishments, right? And so to me, it's nothing that new about what should be happening, what should not be happening during a State of the Union. Also, it wasn't literally a State of the Union. I know a lot of people are saying that, but a joint session of Congress is a State of the Union, in my opinion. And that's basically what happened last night, even if it wasn't literally one. But it was just Trump being Trump and bragging about all the things that he's been able to do. So let's watch a couple of quick highlights from it, and then we'll keep going from there.
Lead humanity into space and plant the American flag on the planet Mars and even far beyond.
Okay, so that's Trump saying that we're going to put a flag on Mars. So that was him saying that. He did talk a little bit about tariffs and inflation as well. He didn't talk about crypto. He talked about a lot of social issues. Here's him talking about energy.
Inflation is rapidly reducing the cost of energy. The previous administration cut the number of new oil and gas leases by 95%, slowed pipeline construction to a halt, and closed more than 100 power plants. We are opening up many of those power plants right now.
There was obviously a lot of clapping throughout the entire speech. That's what kind of happens at these.
That's why on my first day in office, I declared a national energy emergency. And get it. It's called Drill, Baby, Drill. Billions of dollars each. There's never been anything like that one. It will be truly spectacular. It's all set to go. The permitting is gotten. And later this week, I will also take historic action to dramatically expand production of critical minerals and rare earths here in the USA.
So, I mean, look, those were the kind of core updates. He talked about inflation. He talked about Mars. He talked about unleashing American energy. He talked about a lot of the social issues in regards to the money we're spending on certain things that probably don't matter. He talked about Doge. He did congratulate Elon, which was nice to see. So he gave Elon some coverage at this event. We'll take a look at that. But the majority of it, I don't want to say it was necessarily a campaign speech because he was talking about things that they've done, and it wasn't him like literally campaigning. He was trying to engage in some of the nuance of policies. But these speeches end up just sounding like speeches where, you know, one candidate is just very happy to talk about their accomplishments and their accomplishments only, and it ends up pseudo becoming a campaign speech. So whether it's a Democrat or Republican, that's what these speeches end up turning out to be. There was nothing substantial there outside of the fact that he was playing to his crowd, playing to his base. And one thing that was interesting is that no Democrats clapped at any moment of the speech, even in certain parts of the speech where you thought they would clap, which I did think was a bit weird. I mean, there were certain parts where Trump was highlighting things that objectively I feel like people should clap about regardless of who's in the office. And we didn't get those claps or sort of acknowledgments from the Democrats. The only part they clapped was when Trump talked about the Ukraine war. So they were cheering on Ukraine. They weren't necessarily cheering on some other parts that Trump mentioned. So that part I thought was just a little childish. I mean, whether it's Republicans or Democrats, you could hate the president, but you know, certain things I think you clap about. Regardless of that, it was just another polarizing speech between Republicans and Democrats. Here's Trump introducing Elon to Congress as well.
Of government efficiency. Doge. Perhaps you've heard of it. Perhaps. Which is headed by Elon Musk, who is in the gallery tonight.
This is the first time I've seen Elon wear a tux in like years.
Thank you, Elon. He's working very hard. He didn't need this. He didn't need this. Thank you very much. We appreciate it. Everybody here, even this side, appreciates it, I believe. They just don't want to admit that. Just listen to some of government.
So, yeah, I mean, that's what we had at the State of the Union. Nothing too crazy. But it was him bragging about what he had to brag about, whether it's a Democrat or Republican. They would take that opportunity to brag about their accomplishments. He didn't say anything that would affect the markets, is what I'm trying to say. Like, there wasn't anything there. He didn't talk about crypto at all. He very briefly talked about inflation and how they were going to get egg prices to go down, but that's not really anything substantial. He talked about tariffs in the context of tariffs actually being a like retaliatory tool that they can use to get what they want. The one thing he did say is that Zelensky wrote him a letter before he went live, a couple hours before he went live. And in that letter, Zelensky said that we are ready to come back to the negotiating table and sign the minerals deal. And it looked like, based on what Trump said, that the minerals deal will get signed pretty soon. So although they had that whole public exchange in the Oval Office on Friday, at the end of the day, Zelensky wants the deal. The United States probably wants the deal. And so it looks like this deal is going to get signed. And he bragged about that deal getting signed, and Zelensky sending him a message about how he's very grateful for the United States and wants to sign that deal. Zelensky did send that message. The question now is, when is that deal going to get signed? And I would hope soon, which is important, because if they're able to get that deal signed, you have a further pathway to peace, which is good for the broader equity markets. But we need to see if that ends up playing out as well. And Zelensky did send that message because he publicly posted the message on X as well. So anyone can go out and read it. We got Lutnick that just went on Bloomberg right here. He's talking more about tariffs. Let's go up to him, and then we'll keep going from there.
With a question about your comments yesterday, when you suggested that maybe there could be a compromise on trade between the United States, Mexico, and Canada, and maybe we'd hear more about that today. Has the president confirmed that? Is that still the plan?
Well, I think what happened is you have the trade ministers and all the people from Canada really working hard with our Homeland Security people. Remember, this is not a trade war. This is a drug war. We've got fentanyl still pouring into the country, and it's got to stop. So what's happened is they're showing us even more ways to try to stop the flow of fentanyl. And if they can stop the flow of fentanyl, the president is open-minded. There are going to be tariffs, let's be clear. But what he is thinking about is which sections of the market that can maybe he'll consider giving them relief until we get to, of course, April 2nd. But I don't want anybody to forget, April 2nd is the day that we announce our reciprocal tariffs around the world. And so April 2nd is coming, but this is about fentanyl this month.
Got that. Just want additional clarity. Just to be very clear on this. Yesterday when you said, I think the president's going to figure out, you do more and I'll meet you in the middle, we're probably going to announce that tomorrow, as in today. Can we no longer expect that announcement?
No, I didn't say that. I said the president is listening to the offers from Mexico and Canada. He's thinking about trying to do something in the middle. He's thinking about it. We're talking about it. We're going to, when I leave here, I'm going to go talk about it with him. And I think early this afternoon, we expect to make an announcement. And my thinking is it's going to be somewhere in the middle. So not 100% of all products and not none, somewhere in the middle, because I think Mexico and Canada are trying their best, and let's see where we end up. So I do think somewhere in the middle is a likely outcome.
Okay, so again, that's what he said on Fox Business yesterday, which essentially means, which essentially means that the tariffs are not going to happen as aggressively as he thinks they're going to happen. But who knows at this point, dude? Who knows? Like, I don't think anyone freaking knows. I wouldn't be surprised by like 1 p.m. today. That's when Trump usually does some type of press conference, that we get some type of deal signed and markets rally on that. But I also wouldn't be surprised if, there's no deal and it goes back to normal. S&P 500 right here, 0.09%. It's basically flat. We'll see in the next 11 minutes if we open and we get green, but the tariff talk continues to create an uncertain time for these broader markets. Tom says that essentially means the recovery yesterday goes away. Yeah, and yesterday it was a slight recovery towards the end of the day. It was actually a really good recovery 5 minutes before I went live yesterday, and then it kind of all faded away, and then it kind of ended green, not really, but a little bit. So I mean, at this point, this is the nature of the markets, dude. Like, I don't trust any bounce. Nvidia was at 120 yesterday. Now it's back at 116, right? Like, I think Nvidia is going to be bouncing here for a while. For Nvidia to make a full return back to that 140 level it was at before, earnings, or at least 135. I think we're going to need sentiment shift. We're going to need macro shift, and we're going to need to see tariff uncertainty start to become certain. What is important though, yesterday, and we talked about this, the fear and greed index got lower than what it did on August 5th. Dan Niles, who is someone who his number one position has been cash for 2025. And quite frankly, he's been right to have cash as his number one position. Even he came out yesterday on CNBC and was like, yeah, I'm going to start buying. And the reason he said I'm going to start buying is because equities finally started pricing in the risks that he's been thinking about since the beginning of January, which relates to tariffs and uncertainties. And now these multiples have started to get a lot more attractive than before. So, I mean, seeing him say that he's ready to buy just shows me that fear and greed is definitely getting to a point where professional money managers are thinking that it's kind of stupid to not at least nibble at the market. Tom Lee did say this week we would be bottoming. Maybe that bottom was 573 on the S&P. We'll find out on Friday and then next week if that bottom can hold. But it's getting people to get a little bit more excited to at least start buying the dip here instead of being necessarily scared to buy the dip. Robinhood did add a new crypto today, ARB, one of many about to be added, concluding the Bitstamp acquisition. They did make that announcement. I think I just saw it like 3 minutes ago. So yes, Robinhood has some new cryptos on their platform. I think they're going to be adding a lot more cryptocurrencies on the platform, which is good because the more currencies they add, obviously the better chance we have of seeing more crypto trading volumes as well, which is good. Steven, thank you for the €5 super chat. MP Materials Corp, the only US-based rare mining earth company, some value there perhaps. I've heard of this ticker before, MP. Yeah, I'll take a look at this one. Up 8% right now in the pre-markets. It's probably up because of the minerals deal that the market thinks is going to get signed. I'll take a look at this one. I've heard of this for about a year. People have been talking about minerals because a lot of people have been thinking this Ukraine deal has been coming for a while. So this one's up 8%, probably on the idea that Zelensky and Trump are definitely signing this deal. $3.6 billion market cap. Definitely want to take a look at if you are interested in the mineral sector. Here's what the ADP people just came out and said. We got an update from them. This is their chief economist. For those that are just joining, labor market was 77,000 versus 144,000. So that was a pretty big miss in regards to what was expected. Neela Richardson, the chief economist at ADP, said policy uncertainty and a slowdown in consumer spending might have led to layoffs or a hiring slowdown last month. Our data, combined with other recent indicators, indicates that employers are hesitant to hire as they assess the economic climate ahead. Pretty PC statement. I agree, right? Like if consumer spending is low and policy uncertainty, which we've been talking about for a while in regards to tariffs, is creating fear in the market. I mean, yeah, it's pretty simple. That's going to get people to not hire as many people, and that's going to keep job growth slowing down. Again, the bright side to this is we're more likely to get a rate cut. The downside is the rate cut for the wrong reasons. Now, here's another nuance as well. Even if we're not adding that many jobs, we're not necessarily going negative in terms of job growth, right? So if we're only adding 70,000 jobs versus 140,000 jobs, but we're not firing all those people as well. And we'll see when the unemployment data comes out, because maybe we are net firing a lot more people. The impact shouldn't be as horrible because although there's not that much hiring, there's also not that much firing. So you have more jobs open, but you don't have that many more people unemployed. Now, if the unemployment rate starts taking up in regards to just more people are losing their jobs and more people are not getting hired, then you get to the point where people don't have disposable income and they're going to stop spending, which is going to hurt the economy. So those are kind of two pieces of data we have to take a look at, and eventually we'll find the answers to that over the coming months as we get more jobs data. All right, Palantir. So we got a new deal with Palantir today as well. Palantir and TWG Global announced a joint venture to deploy AI programs across the financial services and insurance sector. So here's what the headline said today. Again, our second press release in a row from Palantir. Palantir and TWG Global today announced a joint venture to redefine AI deployment in banking, investment management, insurance, and other financial services. By pairing Palantir's unmatched AI infrastructure with TWG's deep expertise in business operations and financial services, this initiative will enable financial institutions to integrate AI at scale, moving beyond fragmented piecemeal solutions to a singular, fully embedded, enterprise-wide approach. Now, the company themselves and some of the employees at the company are feeling pretty good about this deal. Here's what one of the employees who works at Palantir said about this, Akshay. More than a mere partnership, this initiative represents a fundamental rethinking of AI's role in business, moving beyond a tool managed by IT teams to an artificial workforce integrated into every core function. I mean, it's nice to see, right? There's not much to say other than it's nice to see. They had a deal yesterday with Societe Generale, which is one of the largest banks in Europe that I found out about yesterday in France, because I did not know that that's a $1.6 trillion asset bank, but it is. So they had that deal yesterday. They have the TWG deal today to implement AI infrastructure across the entire company. Like, they're getting more deals. They're getting more commercial products at scale. And in particular, the international commercial deal they got yesterday with France, I really liked, because that's a big client. To actually confirm that client internationally in a country that is not fond of Palantir, there's just a lot of bureaucratic political stuff they have to fight through to get those deals. I thought that was a good thing. So it's nice to see them getting continued momentum. Now, we do have some updates as well from the analysts on Palantir. So here's what William Blair had to say today. They upgraded Palantir to a market perform from underperform. And this is what they said. While valuation is still frothy with potential downside risk of greater than 40% on government contract delays, there have been positive developments. If the market reverts to risk-on mode, the stock price may return to its prior peak, but we expect shares to be range-bound over the next year with continued elevated volatility given the puts and takes. A government shutdown on March 15th may cause further downside pressure. I don't know if we get that government shutdown. Congress has to pass this funding bill. Hopefully we get it passed. It's already passed through the House, but yeah, we're going to need to get something passed soon in order to avoid the pain from a government shutdown. So William Blair, Louis De Palma, he's not been a fan of Palantir like for the past couple of years, but even he's upgrading them to market perform from underperform because he's recognizing the growth in the business is starting to get stronger. We got another update from the sell side on Palantir. This one was a bit more bearish. Let me see if I can pull this up right here. I believe it was from Jeffries? I think it was from Jeffries. I read this in the morning. I can't find it right here, but it was from Jeffries. Basically, they said this shit's going to fall even further. They said, hey, we think there's like a 50% more downside right here, and we think the valuation is aggressive. That's weird. I can't find it. I only have the William Blair one. I'll find the other one as well. But essentially what I read in the morning was that, hey, we think multiples are still expensive. We think those multiples being expensive warrants people taking some profits right here. Oh, they also mentioned that Carp is selling a lot of stock. So they said that Carp's already sold like, I don't know, $5 to $10 million worth of stock in the beginning of 2025. We think he's going to be selling a lot more stock. And so investors should be concerned because Carp is selling at these levels. My take on that is that I think that's irrelevant. I think the Carp Insider stuff is stupid. What I do think is relevant is that the valuations are extended in a world in which I don't know if this market can handle these valuations being this extended. Again, Palantir trades at not 80 times earnings. They trade at 88 times revenue, which is much more aggressive. And then times earnings, they trade at 150 times. So it's one of those things where the fact that we're even holding the mid 80s to me is phenomenal. If we are range bound and we can continue holding these 80s in the midst of all of this market volatility, I think that would be amazing. It means that there is enough appetite to buy the dip. It means that there's enough people that are just not selling their stock because they believe in the company. They believe in the growth story, which I think we're going to get closer to 35% growth by the end of the year. And it believes that there is a moat that deserves a premium. The problem is when valuations compress, all of that stuff goes away. And so far, it hasn't gone away for Palantir. It's gone away from 125 to 80, but like that is not that big of a deal given 125 was already very aggressive. So, I mean, yeah, at the end of the day, Palantir is still frothy. I think if there's any company that can maintain its frothiness, it is Palantir because of its moat. But if the macro goes to crap, which it has kind of gone to crap over the past month, and Palantir has stayed at 85 down from 125, which actually makes me grateful we went to 125 because imagine we were stuck at 85 for the whole year. We'd probably be 15 or 30% lower than 85, right? Because you needed some level of retracement. In this case, it happened from 125 to 80. It's better than happening from 85 to like 65. So we're going to see how it goes further from here. But I think earnings growth is going to be fine. I don't think there's going to be any worry on that front for Palantir. It's just more of a macro question. And that's what some of these analysts are questioning given the environment that we're in right now. So that's what we got on Palantir. All right, we got 45 seconds until the market opens. Let's see how we get into the 5th day of March and where it goes from here. I mean, the typical playbook is we're green in the pre-markets, which is where we're at right now. And then in 20 seconds, we have some more green candles and I get super excited. And I'm like, all right, guys, I think, we're getting a little bit of movement. We got NVIDIA inching near 120. And then by like 9:50, someone presses a button. And I'm like, well, guys, yeah, the uncertainties are just like, it's just horrible. It's like you guys have heard this story and this playbook every single day for like 3 weeks now. But This is what's happening every day. 9:30 a.m. Wednesday, March 5th. Thank you, everybody, for being here. The stock market is once again open. All right, wake your ass up. Robinhood goes flat as we open the morning. NVIDIA opens up 1%, 0.98%. Not bad for NVIDIA. At least we got a little bit of green right there. CrowdStrike down 7%. I would not be surprised if CrowdStrike goes down 10%. I also would not be surprised if people buy this dip because CrowdStrike's a phenomenal company. They missed by $1 of EPS in terms of their earnings guidance, which is why they're down. But CrowdStrike right here at 359. S&P 500 is flat, very close to going red. We'll see if that does go red. Palantir gave up most of its gains. It was at $88. Now it's at 85. Again, the typical playbook we've seen for the past 3 weeks. Pump in the pre-markets and then dump as soon as the market opens. Robinhood now is red by about 0.5%. Grab is up 1.39%. NVIDIA up 1.34%. Bitcoin just under 90,000 at 89.8. It was at 90,000 about 30 minutes ago. Right now, currently at 89.7. Palo Alto goes red on CrowdStrike earnings. You have Netflix that's slightly green. SMCI, which was up 12% yesterday. So at least SMCI held some of its momentum. That's at 39.64. That's up 1%. Meta is up 0.5%. Google is up 0.5%. SoFi, which was at 12.24 yesterday. Like, that was just stupid. But we could see that happen again if we continue to see macro volatility. 13.08 on SoFi, down 0.5%. Rocket Lab is up 0.13%. Tesla is up 0.2%. Tesla did get to 261 yesterday and then rebounded to 290. Right back here to 273. Enphase is down 0.33%. Nubank is up 2%. Vertiv is up 1%. Vistra is down 3%. Amazon is at 204. Amazon was below 199 yesterday. It was at 197. Bounced up to 204. Currently up about 1%. The Qs went all the way to 487, back to 496. They were at 500. Now they're at 496. So again, that bounce at 345 yesterday kind of got faded towards the end of the day. Target down another 2% after falling 6% yesterday. NVIDIA right here, 116.50. We've got red candles on NVIDIA. NVIDIA was at 118. Now it's at 116.50, a couple bucks away from getting into the red, or a couple cents away from getting into the red. Nebis, which is one of those NVIDIA proxies, that one is up 4.19% currently right now. I think they have earnings today, if I'm not wrong, or earnings tomorrow. We have a couple other companies that have earnings today that are important. Yesterday was CrowdStrike. Today, after the bell, it's going to be MongoDB, Zscaler, Rigetti in the quantum space, and Marvell. So a couple quantum names, and then tomorrow it's going to be Broadcom. So we do have some of those big names. Palantir, 5 cents away from going red. There she goes. Palantir goes red. NVIDIA is 20 cents away from going red. Robinhood is already red. Grab, I think, is being held up by the dollar weakening, but Grab's probably going to go red pretty soon. S&P 500, 5 cents away from going red. CrowdStrike now down 8%. Elf Beauty, which has been decimated all year, that's getting a little bit of a bounce, up 2%. And then the crypto names are probably getting hit as well. MicroStrategy, no, it should be up because Bitcoin's up. Well, it's flat. MicroStrategy 274. That is currently flat right now. Bitcoin below 90K. Yes, Bitcoin below. Oh, they already had earnings? Okay. Well, it seems like the earnings were good. Were the earnings today, or were they were today? They weren't yesterday, right? I'll take a quick check on that, but I think we would have known if it was yesterday. Yeah, so that one's up 4%. So that one, it looks like the earnings came in to be decent, at least, which is what we see. Oh, we had Abercrombie earnings today. Abercrombie, where's A&F? Do you guys remember A&F was like one of the best performing stocks last year? A&F, oh my God, down 14%. Holy crap. Okay. It was 2 weeks ago? All right, well, I guess we might have covered it very quickly. I don't think we spent a lot of time on it, which is why I forgot. But, well, Nebis is up 4%, which is at least nice to see that right here. Abercrombie, they beat on the top and the bottom. 357 versus 356 on EPS. That's a beat. 1.58 versus 1.57. That's a beat on revenue. They are down 14%. Even if you don't own Abercrombie, this is important to understand in the context of the consumer. They are a retailer clothing company at the end of the day. And if they had any guidance around people are not buying clothes at the rate they were buying last year because they're scared, Abercrombie is a little bit more of an expensive company when it comes to clothes. That could be a reason they're down 14%. Camillo was bullish. Oh yeah, he was bullish, right? No, you're right. He's bearish. Elf, and he was bullish Abercrombie. You're right. I think he's long Abercrombie. I don't really know his thesis, but I do remember him saying that he liked Abercrombie this year. Down 14%. So Abercrombie definitely having some pains. We got to go through their earnings and see what's going on. They beat on the top and the bottom. Looks like that's fine, but guidance has to be messed for them to get hit 15%. Yeah, dumb money. We're talking about Abercrombie in the last video. That is correct. Dude, I used to shop at Abercrombie when I was like 15 years old. Like when I was young, bro. Like I just like Abercrombie is like, I guess it's still a brand that's relevant to the youth. The reason their stock exploded last year is because their operating margins went up by 7x, like literally went up by 700%. So that's why they really started to expand free cash flow, and then the business started to pick up. The stock obviously reflected the increase in free cash flow. But I personally don't shop there anymore, and I don't know if that many people do. But look, they beat on earnings, but stock right here getting hit, which is a very similar thing we see in a lot of retailers. They beat on earnings. What happened with Target yesterday? But then their guidance is soft, and then the market says, all right, we're not going to stick around for this story because we kind of know how it ends. NVIDIA is 19 cents away from going red. S&P is holding on by a thread to its green. Palantir is already red. Robinhood, again, is red. Some of the Max 7s right here. Meta's green. Microsoft's green. Amazon, NVIDIA, Tesla are all green, even though they're very slightly green. Google is red and Apple is red. Apple right here at 235. Raul says all the brown boys from Jersey shop there. You are 100% correct. Along with Hollister. You guys remember Hollister? Hollister and Abercrombie. That's what everyone back in 2012 shopped at. But like I haven't heard of those brands in so long. That's why I'm just like, I don't know what's so exciting about them anymore. Where's Oklo? Let's look at the spec names. Apple deserves to be red in my opinion, again, because of this valuation, but Apple is one of the names that people run to when things get really scary, which is why I think it's been holding up. Oklo's down another 4%, so nuclear is getting hit right here. So as much as I think Apple probably deserves to be a lot lower than here, I don't think it's going to be that lower, because if we really get some uncertainties, I think people will flood into Apple. Like it's just the safest bet that people can go to, which is contrarian, but I guess that's how people think about Apple. All the spec names are red outside of AMC and Faraday Future. MicroStrategy, GameStop, Kohler, Qubit, Rigetti, IONQ, D-Wave, SoundHound, Archer, Big Bear. Big Bear has earnings today as well, right? They're down 4%. They were at almost $10 2 weeks ago. Now they're at $4.50. So this one, a classic example of speculative names that in this environment are just not catching a bid. They've got to have some really good numbers on earnings to get a bit of a reversal right here, but they are down about 40% from the highs this year. Qs are big red as well. Qs, yeah, there you go. Qs are definitely going red. NVIDIA, there she goes. There she's red. At this point, it made no sense to be green by 0.05%. Might as well have gone red. NVIDIA is interesting, bro. It's not finding any momentum at all. Like every time you see a little bit of green, it just gets hit down. And at this point, I think a lot of people are questioning the NVIDIA trade, which is healthy. That's not a bad thing. But it's definitely not just like finding a base and then moving on from that. It just constantly goes back and forth. Abercrombie now down 16%. Dude, what did they say? I'm going to see if I can get a quote from the CEO. What exactly did they put out? Earnings release. Let's see if there's any guidance here. Consumer. They had to have said something that was not good. Yeah, I don't see it on their sheet yet. They don't give any guidance. They don't have any quotes either from the CEO, but something is definitely pissing off the street on this one. This one's getting hit. It had to be something around weak guidance, most likely. What else? We have DraftKings. Is that one up right now? DKNG. This one is up. That's up 1.5%. Grab's holding on, I think, because of the dollar coming down. Robin making a little bit of a comeback, but still down about 2.5%. Palantir now down 1.5%, 83.04. SMCI now down 1%. Yep, all the high flyers are going red. SoFi back under $12, just like yesterday. Tesla back under 270. Rocket Lab back under 19. I mean, Nubank is about to go red. It was up 4%. Now it's up 1.2%. I mean, you can't trust a single move in this market. Like, I understand why people don't want to look at their portfolio because they just don't believe it, if it's green or if it's red. Because to be fair, the red has been bouncing towards the end of the day as well. But the green obviously has not been holding on at all. And it's kind of just like a state of limbo that we've been in for the past couple months. Yeah, obviously tariffs are contributing to that. But it has been just a bounce back and forth. For those that are just joining, the private payroll numbers came in today, 77,000 versus 140,000 expected, which is bad because we added, less than half of the jobs that we needed to add. However, Market's not really tanking on that. Again, the S&P is basically flat. It's red, but it's flat. Now it's green. But it's up $1, so basically flat. So it's one of those things where like negative GDP growth is not slowing us down in terms of like market momentum, which to me a slowdown is like a real pullback. We're not really seeing a real pullback. And then job growth being as bad as it was this morning, this is also not creating a serious pullback. It's obviously created a pullback from the highs, but if you assume those highs were never supposed to be that high, year to date, the S&P is down 1.3%, which is just not an ugly stat when you look at it, even though the jobs data have sucked along with GDP data. So it's holding up for some reason. Here's one piece of hopium from our boy Ryan Dietrich. Wednesday has been the best day of the week in 2025. Today is a Wednesday, right? Yes, today is a Wednesday. So Wednesday has been better than Monday, Tuesday, Friday, and Thursday. If you annualize the returns, Wednesday would give you a 78% return, whereas Monday you lose 111% of your money. So it's like, if you just look at this chart, you wait to buy on Monday and Friday, and the rest of the week, you kind of just stay chill. But who knows, maybe like the fact that we're going to this type of hopium to justify why we should be bullish on Wednesday is how bad it's gotten in terms of not how bad the markets have gotten, but how bad our sentiment has gotten to try to get bullish. Doug says that's some pretty thin hopium. I don't think Canada or Mexico would bother keeping that out. Yeah, I don't think they care about Wednesdays. But did anyone watch Wednesday on Netflix, dude? I never got into that show. Like people really swore by that show. I think I watched 2 minutes of it and I got bored. And I was like, this is stupid. Look, why am I watching this? This is like some Halloween thing. Like I just never got into that show. What's the name of the actress? Jenna Ortega, is that her name? She's an amazing actress. Like she's phenomenal. But I never got into the show itself. Like it just never got me excited. Kramer speaking about Palantir. All right, let's go to Kramer. Let's go. Let's see what he's having to say about Palantir. Let's see. He said he liked it. Let's see if he continues to like it.
Speaking of ticker symbols, the worst performing one on the S&P right now, Jim, is CrowdStrike. You've been a staunch defender of this space in general.
We bought some this morning. And we saw a lot between 4 momentum stocks when they paused. Horrendous antipathy by 3 analysts, and 2 folded. Now the 3rd folds. And Alex Karp is able to sell more than $2 billion worth of stock. There's got a lot of stock. But I do think that this is, once again, people saying, wait a second, they weren't hurt by government cutbacks. They could be enhanced. My belief has always been that when they get to the Defense Department, Musk will say to Alex Karp, fix it, make it more effective, make it more lethal. And that's what's going to happen.
So they're a beneficiary of Doge.
Yes, they're the beneficiary of Doge. People thought they were going to be someone hurt by Doge.
Well, yeah, that stock did get hit on the day when
there was ill-advised selling. There's a lot of people doing a lot of things off of, like, by the way, I think that the algorithms drove a lot of CrowdStrike last night. They didn't understand you had to add back 90 cents. I mean, they don't do it. You have to look at the income statement. And I'm expending waiting for the president to talk, which was about 40 minutes. And I finally got through the income statement because there's just a lot of different adjustments, and the machines can't adjust. But Palantir was hated. No, they can't.
Machines can't adjust.
No, they can't adjust.
These incredibly sophisticated algorithms created by literal rocket scientists.
AI never fails.
Imagine. And it.
Cool. So, I mean, look, I can't say I disagree with what Kramer said right there. I do think Elon's going to tap Karp on the shoulder, and he's going to be like, hey, fix this shit. And I literally think that's what they should do. Obviously, I'm a bit biased right here. Palantir going green right now. But quite frankly, the Fed, the Bureau of Labor Statistics, the Bureau of Economic Analysis, they are so antiquated in terms of how they're aggregating data to get insights from that data. By the way, those insights are determining the state of the U.S. freaking economy. You would think we have a modern software approach to manage all that. Same thing with the IRS, FDA, etc. I feel like if Trump signed this executive order of a Doge liaison being attached to every single government agency, Elon could easily say, okay, part of that Doge liaison is going to be a team that I've got from Palantir that's going to go into every agency and see how they can modernize the platforms. And as a result, create a legitimate operating system across every agency that desperately needs some modern software. I don't think that's hopium or euphoric to say that's a thesis that's possible. Will it actually happen? We're going to find out. And, if it even happens, how much impact does that have on Palantir's revenue growth? All those questions remain, but I think it could happen. And it's been showing a lot of hints just between how Karp has been talking with Elon publicly that there is something there. XAI and Palantir just launched the partnership. We saw at DevCon a couple weeks ago. So there's something there. I don't know if it'll actually materialize, but if it does, obviously that would be very beneficial for Palantir. S&P 500 is going green right here. Is NVIDIA going green as well? NVIDIA is going green as well. Kind of a little bit of a 945 bounce. I don't think there's any economic data to cause this right now. Let me see if there's anything. Is there anything right here that we got? No, but we're about to get something right now. All right, we're about to get PMI data again. Global composite PMI that's coming out literally in 10 seconds. We're about to get that data. Maybe that data leaked real quick, and that's why market's up. Market wants. Oh, that's actually good. Whoa, that's good. That's not bad. Yeah, I think someone knew about that data. So market wanted 49.7. We came in at 51. Market wanted 50.4. We came in at 51.6. That's good on the PMI composite and on the PMI services. Again, above 50 is expanding, below 50 is contracting. On ISM 2 days ago, we had below 50s on 5 out of the 6 metrics. Today, on the 2 most important ones, we get ISM at 10 a.m. We are above 50 on both of them, and it's above expectations. More importantly, even if it's above 50. That might be a reason for why we're getting a little bit of, I don't even want to say it's a bounce, bro, but it's like it's a candle that's a little green. I feel like the barrier to say bounce has been raised at this point because these are not bounces, but these are nice little candles that will last for like 5 minutes at least, hopefully. Okay, so PMI data is good. That's some good signs when it comes to growth, better than the crappy growth data we've been getting over the past couple of days. ISM we get at 10 a.m., so we'll see what that looks like. 18 on fear and greed. We are very close to levels we were. Yesterday we got to 14, bro. That's how bad it was. And some of these stock prices are not that far away from where we were yesterday. So, I mean, Trump says one thing, I think we could definitely get back there, but we are still here at fear and greed. Here's another update for you guys. This is very similar to what Chris and I were talking about yesterday when it came to mortgage rates and when it came to the 10-year the 10-year coming down to be able to refinance those mortgage rates. Take a look at this. U.S. mortgage applications in the United States over the past week jumped 20%. The first increase in 3 weeks after the 30-year fixed rate mortgage fell to 6.73%. Refinance applications surged 37%. Purchase applications rose 9%. And this is the lowest mortgage rate on a 30-year fixed rate since December 2024. Why is this happening? Because of the 10-year. So the thesis Chris had yesterday, which is what, Scott Bessent, Treasury Secretary, has been saying, is that if we get the 10-year to come down, we will get the housing market to unlock. We will get lower housing prices. We will get more affordable mortgages that people can take out. And as a result, that should help demand in the broader housing market surge, even if that creates volatility in the stock market, because you need the bond market to move down in terms of yields, aka people buying up the bonds and not buying stocks, which means you need volatility in the stock market in order for bond yields to eventually come down. I mean, so far in terms of mortgage rates, that's at least playing out to an extent with these rates getting lower and demand getting higher. Palantir, by the way, about to go red after its little green candle on PMI data. So, I mean, maybe that thesis is somewhat playing out. Good for SoFi. Yeah, it's great for SoFi. It's great for the banks as well. But that was encouraging to see. I mean, I know people talk about this like housing market recession that we're currently in, but like as soon as like every time rates go down even a little bit, we saw this back in October as well. People are jumping to buy a new house. I mean, people really want to get a house, and they probably know they can refinance in a couple of years when rates come down even further. But the demand that people have on the sidelines, maybe it's because people made a lot of money in the stock market over the past couple of years and they've taken profits and now they're ready to put a down payment on a house. But there is massive demand out there. And if rates come down, or at least there's massive demand waiting on the sideline, and as rates come down, I think those people will immediately get into trying to get a house. The problem is that's going to create a lot of competition. And if we don't have enough supply to fulfill that competition, that could also lead to some level of inflation. But the home builders are building nicely. And as long as there's enough supply, we should hopefully get lower prices from that on houses, which have increased the most. They've increased since 2020. I think now the average price on a house is like $450, whereas back then it was like $410. But people want to buy a house, and mortgage rates are one way to get them to buy a house if those rates can eventually come down. RKT is another mortgage rate play. So that one also benefits from this. RKT right here is up 4% right here. The reason they're up 4% is because of that mortgage rate demand. So that is another way rocket companies to get exposure to the mortgage sector. CrowdStrike is dumping. CrowdStrike is dumping, down 11%. There she goes. Down 11%. Any green is a bounce at this point. That's correct. Any green is a freaking bounce at this point. Yeah, CrowdStrike. Look, CrowdStrike, again, for those that are wondering, first of all, if anyone owns CrowdStrike, let me know. And if you're buying this dip, let me know. They missed on their EPS guidance by $1, which is bad. Is it bad to go down 11%? Well, when you're trading at these multiples, probably. I mean, Palantir has not missed earnings. You can say whatever you want about Palantir, but they have not missed earnings for like 5 quarters. If they miss earnings, they're going to get hit. I don't think they're going to miss any earnings, especially because analyst expectations are already so low for the company, and analysts just don't believe that they're able to grow, which is why they keep having these low expectations that Palantir keeps surpassing. But CrowdStrike, I mean, if you're trading at these multiples and you miss your earnings, yeah, you're going to get hit. So that's what we're seeing right now, down 11% on CrowdStrike. I wonder if the dip gets bought. I mean, CrowdStrike is a one-of-one company. It wouldn't surprise me to see people stepping in right here, but it is up a lot from that 200 low that it had in August. So you might have some people that are sitting on profits and they might just use this moment to get out and take their profits. And if they are, they're selling their shares to Doug, who is buying some shares in CrowdStrike right now. So there you go. CrowdStrike EPS miss was because of an accounting error, okay? Or because of accounting. I didn't know that. All I saw was the headline that they missed on EPS. If it's literally just because of accounting, then maybe this dip is kind of dumb. But if it's because of like actual weakness in the business, then yeah, that could be another reason. Granted, it doesn't matter. A miss is a miss, and the market's gonna, get upset about that regardless. CrowdStrike getting hurt because customers asking for discounts due to the outage when they upgraded to. So like that's what people are saying. But when you look at their numbers, the net new ARR they're adding is not like showing any signs of slowing down. And I don't think their margins are getting hit either. Like their margins seem to be, they're 77%. They're the same margins they had last year. So at least on the gross margin. So they took a $60 million headwind 2 quarters ago when they addressed this whole fiasco with Delta and all that stuff. Delta is still suing them, but I don't know if Delta has the best case. Like Delta is trying to sue them for $5 billion. I don't think they're gonna get $5 billion out of CrowdStrike. But I also don't know if that event really led to such a dramatic decline in terms of the incentives they had to give and rebates they had to give to customers. At least that's not what the earnings are showing on the top line. But they're still a one-of-one company, and I guess we're going to see over the next coming weeks if people buy this dip. NVIDIA right here, 116.45, basically flat on the day, but still green and not necessarily red. Even though it just was red for a second. Palo Alto, are we going green on CrowdStrike or red? Palo Alto, wow, down 2%. So that one's getting hit. Fortinet's probably getting hit as well. Yeah, that's down 2%. Zscaler, which I think has earnings today, they are also red. So CrowdStrike taking the entire cybersecurity sector down as well. Okay, let's see what other headlines we have. Market's basically flat, nothing too crazy going super up or super down. We talked about the mortgage rates. Oh, here's a nice chart. This is an interesting chart. So, although a lot of people complain about insider selling, they're buying more than not. The past 2 days saw more insider purchases since the December 20th dip after Jay Powell's FOMC press conference. The top insider buys were Moderna, TMCI, FTAI, and Via ERX. Now, these are names that probably a lot of people don't know about outside of Moderna. It's not like the Palantirs or NVIDIAs of the world, but we are seeing some directors step up and say, hey, it's time to like nibble at our stock a little bit. Estee Lauder also had a ton of insider buying. So EL, that company, has been stuck in the gutter, especially due to the China exposure they had. They're up 3% right here. AMD has had some insider buying as well. So, I mean, we have seen some insiders step in, buy their stock. AMD right here at $100, down about 0.5%. But it's not on like the biggest names that a lot of us follow. Novo's up to 3.3%. Yeah, HIMS was down today. HIMS is down 4%. Novo is up 2.3 or up 4%. And the reason was because of this headline. The headline was, me see if I can pull up this headline, but it was a certain, I'm sure you guys already know the headline, but it was a headline that was bullish Novo, bearish Hims. Yeah, here's the headline right here. So they introduced NovoCare Pharmacy, and that is lowering costs of all doses of FDA-approved Wegovy to $499 per month and offering ease of home delivery for cash-paying payments. So, yeah, that was bullish Novo Nordisk, bearish Hims. I don't think it's necessarily bearish Hims, but it's it's not the best for Hims. I always wondered if you looked at SE since you're in Grab. Yeah, I looked at SE. I haven't done my full due diligence on them. I'm probably not going to invest in SE because I'm already invested in Grab. So I know people say SE is the better company. I know they say their growth is better. I get it. To me, there's another thesis for why I like Grab more than C Limited, but they're up 5.6%. They had a great earnings yesterday, incredible growth. For anyone who's invested in this company, you've done very, very well. My thesis is that Grab is a bit more undervalued than this name, but it's not like this name is a bad name at all. So C Limited right here, year to date, is up 33%. I mean, it's done very, very well. And it's proving that Southeast Asia as a region is a region to bet on, right? I just think Grab's cheaper. And so that's why I'm a bit more excited for that company. But yeah, both of these companies, powerhouses and C Limited, really showing off the earnings growth to justify it. MicroStrategy right here is up 1.82%. Grab's up 1.59%. Robinhood trying to go green at 45.50. Baba is green. NVIDIA goes back to being red for the 5th time today. Elf Beauty is flat. TLT, a little green as the 10-year continues to come down. Netflix 9.75, and then SMCI going red on the day at $39. So there you go. Foot Locker's up 6%. Interesting. I think they did report today. Foot Locker, FL, that's up 7. That's interesting. You would think Foot Locker is going to not do as well given this whole consumer stuff that's going on. The day report, I think that, let's see if they reported. I feel like they report at the end of the day, not today. Foot Locker, no, they reported. Okay, so they beat on EPS, they missed on revenue. 86 cents versus 72 cents. And then 2.24 versus 2.3. That's a miss on revenue, a beat on EPS. It's a nice beat on EPS by about 15 cents. Probably why they're up 7%. $1.7 billion company. Revenue was a slight miss. But it's weird that Foot Locker is even green. I guess their consumer guidance was bullish. I would imagine the market would just be so afraid of any of these companies, Foot Locker, Walmart, Target, etc., and they would sell them off regardless. But they are keeping that one afloat. Okay, let's see what else we had. We did have Lutnick come out today in the morning and said that he thinks there's going to be a deal that's coming up pretty soon when it comes to tariffs. He said literally by today, we're going to get that deal. We'll see if that ends up playing out. But we will find out in the coming probably hours. Let's get another update on tariffs in regards to auto production and what's happening there. Trump did say something interesting last night. He said if you make your cars in America, the interest payments on those cars when you finance them could be tax deductible, which is super good for Tesla that makes their cars, a lot of them in America. Will that actually go through? We're going to see if Congress can pass that tax bill. Obviously, he wants no taxes on overtime, tips, and Social Security. But that would be a major thing if you could deduct the interest payments from your taxes if the car is made in America. I think it would definitely get more people to buy American cars, but we got to see if that bill could actually pass and officially go through. INQQ is up as India was up big time today after a long time. Maybe money moving back to India, at least for the start of it. INQQ, this is a India Internet ETF. Yeah, it's up 1.48%. The Indian markets have been kind of rough to start off the first 2 months. I mean, US markets have been bad. China markets have been good because a lot of money rotated. Indian markets have been struggling with their own currency issues as the rupee continues to weaken, but showing a little bit of sign of strength today, up about 1.4%. Here is an update on tariffs in regards to the automotive sector.
Now, with more on this, Phil, we know what the automakers would like to hear, that they will not be penalized for having followed USMCA.
And we know that the Trump administration said yesterday that there were a number of phone calls between Trump administration officials and auto executives for the big three. No doubt, not just with the big three, but for the other auto industry players. A lot of suppliers are going to be massively impacted by these tariffs if there's not some type of an exemption there. take a look at what we're looking at in terms of auto production on a daily basis between the U.S., Canada, and Mexico. This is according to S&P Global Mobility. Comes out to just under 70,000 vehicles. Yesterday, S&P Global Mobility put out a forecast saying, we think that if these tariffs stay in place, you're looking at 30% daily production going away in some fashion. And that's the expectation. About 20,000 vehicles would not be produced, and it's understandable why. The choices for the big three, they're not real good here. They can either move the
real quick. We got ISM data, and that's a beat. 53.5 versus 52.6. That's good. That's really good. I mean, that is not bad at all. ISM services activity, that's a beat. 54.4 versus 54.2. ISM employment 53.9 versus 52.1. New orders 52.2 versus 51.2. ISM services prices 62.6 versus 60.6. So we have a beat across the board when it comes to ISM services today. PMI 53.5 versus 52.7. That is consistent with the global composite PMI. We're getting a bounce on that. I keep saying the word bounce. I need to I need to stop saying bounce. But we're actually getting some green candles on that. like really decent green candles that, they're not vanilla chai candles yet, but they're like strawberry mushroom candles. That makes no sense. Strawberry mushroom, what even is that? But the point is, we're getting some candles that are smelling nice. Tesla right here, 275. Foot Locker up 10%. Palantir up 2%. S&P's up 0.5%. Nvidia going green. Grab going green. Robinhood's about to go green. Nvidia right here, 116. Bitcoin 89,000. In about 5 minutes, all of it will go back down to shit, which is, what happens, but it is what it is. Yeah, I don't know where mushroom came from, dude. You know how these candles have so many weird combinations with each other? Like when you're shopping for candles at these like home good stores. I think I meant to say strawberry marshmallow, but that makes no sense either. Now someone needs to make a strawberry mushroom candle, bro. But they need to make it with actual mushrooms, if you get what I'm saying. You know what I mean? They need to like really use real mushrooms to make this type of candle. But the vanilla chai candles are the best. Those are phenomenal. Okay, so we're getting a little pump. We're gonna go back to the CNBC video, and after 3 minutes, we'll see if this pump is here. And if it's not, then all these pumps are full of shit. But we will see in 3 minutes if the pump continues.
shift or the mix of the type of vehicle. In other words, build the more high content, higher priced vehicles in the United States. If there's a lower priced version, build it in Mexico. That's one example of what they might be able to do. But their options are extremely limited. That's why many expect to see them cut shifts in Mexico and Canada. And then if the tariffs are still in place, you'll see the automakers lower the incentives that are out there, and they're going to have to cut their margins. There's just no way around it, even as they pass along some of the cost increases to consumers. As you take a look at annual auto sales, these estimates are likely going to come down if the tariffs stay in place. Most believe that we're going to be a little bit better than last year, maybe 16.2 million. The average incentive on a new vehicle, in other words, if you go to a dealer, on average, they will say to you, you know what? We're going to give you another $3,500 off a particular vehicle in some form, whether it's rebates, whether it's financing, whatever it might be. That's likely to come down as the automakers look to preserve their margins as much as possible or limit the cut impact. And there you see the comments from the Commerce Secretary having an impact on what we're seeing with the shares of the automakers pre-market. So we'll watch, guys. We'll see, because the automakers, they don't have a whole lot of good options here, and especially the suppliers. I mean, they're locked in. The supply chain is locked in. It's not like you can say, let's build a plant in Indiana, have it up and going in about a month.
That's also a good point, dude. I know Honda is making their new Civics in Indiana, and that's like something that Trump is saying is a really good thing. Obviously, if these tariffs get intense, the only solution for some of these manufacturers is to start building more in the United States, but that's not going to happen overnight. Number two, and I still haven't heard a good answer to this, if car companies make their cars in the United States, I don't know how that doesn't increase car prices given their margins are already so bad. So to me, I'm like, that will be a strain on the consumer unless we get so many units and economies of scale that the price to make a car goes down that dramatically. But that requires an entire reorganization of the supply chain, which is just not going to happen overnight.
Right. So how quickly would this happen? Are we talking next week they would pull off incentives? Are we talking this quarter you're going to see a big cut to margins? Like how?
I think you would start to see it, and there'll be nibbling around the edges within the next week. And then you really start to see it happen over time. That most people in the industry point to the chip crisis, Becky, as an example of what you saw happening with prices and with incentives. And between March of 21 and the end of 21, the average transaction price for a new vehicle in the U.S. went from just under 40,000 to more than 46,000. And now it's at about 48.5, somewhere in that range. So if this sticks, if these tariffs stick, that's what many people believe you're going to see from the automakers.
So, Phil, presumably, the U.S. automakers are likely to say, look, we're in compliance with the USMCA. What types of exemptions in particular do you think they have a shot at getting? Is it just as part of the manufacturing process, as parts go across the border, or something bigger than that?
Great question. I think all options are on the table. I mean, look, the automakers will take anything they can get. They would like it to go back to what it was before President Trump was sworn in. I don't know if that's going to happen or not. And remember, the steel and aluminum tariffs, when those kick in, that's going to hit the auto industry as well. So They are under the gun right now.
Obviously, this is good for Tesla, right? Because Tesla does a lot of their manufacturing in the United States, and Tesla's very vertically integrated. But Teslas also are more expensive than your average Civic or Corolla. That's why everyone's waiting for this $30,000 car that might come out, might not come out by Tesla. But I don't know if a GM, or not a GM, but or a Honda or a Toyota, or a lot of these companies that make their cars in Japan, if they're going to be able to flip it overnight. Now, the pump is still lasting so far off that ISM data that we got. Tesla's still up about 2%. Palantir is up now 3%. S&P is up a third. And then NVIDIA, Robinhood just went green. NVIDIA is up 0.5%. So it looks like the ISM services beats across the board are bullish. Maybe it's showing the market that we do have sustained growth, even if the data yesterday was not as good. A lot of it's conflicting data, to be honest. So I think the market's just trying to figure out what's true and what's not. But so far, we're not seeing that classic dump after good data. Yeah, Robinhood went green as well, currently right now. Do you guys actually think a $30,000 car is coming out from Tesla in the next 2 months? Because again, I still don't know why the analysts on the call didn't ask them about that question. There wasn't a single question asked about, hey, is the $30,000 car coming? Everyone either didn't want to ask that question because they didn't want to be disappointed, or they assumed it's not coming and they didn't feel like even bringing it up. But I felt like that was a really important question and they didn't mention it. And so to me, I'm like, okay, well, are we getting it or not? And I think it matters, obviously, because that's one of the selling points for Dan Ives' upgrade on Tesla to 515. One of his number one reasons outside of FSD was that Tesla will compete in the lower to mid-range market, and someone who's about to spend $30,000 with a 5% APR rate on a Honda Civic or a Toyota Corolla or a Toyota Camry or a Kia will just buy a Tesla. Because a lot of people want Teslas. I know Elon's been getting very political and some of that demand's probably shaking off because of that, but people still like Teslas. It's just Teslas at 45 to 50 grand are expensive. So I do think that matters, and I think we need that catalyst. But I mean, at this point, if it doesn't, I don't know what's going to increase sales deliveries that dramatically. Everyone keeps pointing to Model Y. Every time I talk about this, they're like, well, look at Model Y Juniper. First of all, no one has the numbers for that. Everyone's just assuming it's selling like hotcakes. Like, we don't know about that. Number two, I don't think Tesla would be giving you 0% APR on the Model 3 in the last month of Q1 if they were super confident about their sales numbers. Like, it's just pretty obvious to me. They did this back in November for a reason, right? They lowered the APR to 0 to incentivize volumes deliveries. And they're doing that now as well. So if we don't get a $30,000 car, if we don't get Juniper that ramps up in Q1, which it probably won't because it came out in February, and then if we're getting all these 0% APR incentives, which is going to hit their margins even if they drive deliveries, which is still going to affect the Q1 earnings growth, then yeah, like Q1's probably going to be crappy. Now, again, if you're buying Tesla, you're not buying it for the auto business, but just to analyze it, it doesn't look like Q1 is going to hit it out of the park. Energy is not going to save the business. It's just not. Right? Like, everyone always points to energy. It's not really impacting the bottom line. So I don't know. We're going to have to see. We're going to have to see how dramatically that actually helps them. Arnie says right here, in my opinion, Tesla's waiting for a good moment to launch the cheap car because that's the most important launch. They need good conditions because they probably want to break any record. Yeah, I think that's fair. Also, I think if the new car is just a cyber cab with a wheel, which is what a lot of people are saying it is, then maybe that launch coincides with the 2025 June robotaxi launch, which, by the way, Uber launched yesterday with Waymo in Texas, in Austin. So they officially launched yesterday, and that is happening now. In Austin, they're going to be competing against Tesla, but it happened March 4th, literally yesterday. So that is already officially happening, and it's going to be interesting to see how that plays out and how Tesla's able to compete with them. They have a 37 square mile radius that they're able to actually have these cars drive around. Obviously, I think Tesla would be a way better experience. It's not using LiDAR. Probably it can expand the square footage that Uber's using. But Waymo and Uber officially launched their partnership in Austin. We're going to see how Tesla competes. Maybe when the Cybercab comes out, the $30,000 car, which is a Cybercab with a wheel, ends up being the launch. But I guess we'll find out if that ends up playing out. Arnie says the Cybercab also allows to get feedback from people while ramping initial production. It takes time to have profitable scale. Yes, I agree with that. The problem is the stock, bro. Like everyone's hoping the freaking car comes out soon to make the stock pump. I mean, I don't care if it comes out this year. I'm just skeptical that it will, because I think they should do it the right way. But they did say by first half of, like, let's not forget, in December of last year, they said first half of 2025, which means by the end of June, the $30,000 car, they called it the more affordable version, would be out. I just don't think in the next 2 months that car comes out. I'm really skeptical about that. But if it does, hopefully it's not the worst thing in the world. Well, another reason they probably are not releasing it, to give credit to them, is because they want to drive sales to the Model Y, right? So if they want the Model Y to start pumping, if everyone knows there's going to be this $30,000 coming out, they would stop buying the new Model Y. So there maybe is an argument right here of, hey, we're launching this car that is going to be way better for us in terms of sales and overall margins than the $30,000 car. Let's like delay this thing for a couple months and let's really let the focus be on the Model Y. So, I mean, that could also be an argument that they're deploying. It's just they said first half, and we're nearing the end of first half in a couple months, and I don't know if that's going to be the case. Palantir right here still up 2%. DraftKings is up 4%. S&P now up 0.24. The ISM pump is not going away. Grab's up 2%. MicroStrategy is up 2.8%. Bitcoin trying to make its way back to 90,000. Nvidia holding 116, and then Alibaba right here up 5% as well, holding at 130 currently right now. The affordable car is the Cybercab with a steering wheel. That's what I think as well. But I mean, I guess we're gonna find out if that's the case. How do you think FSD will perform in the crazy traffic streets of India? So I don't think FSD is going to happen in India. I know Tesla's working with India, and they just signed a deal, right? Yeah, 5-year lease for a first showroom in India. So they're expanding into India a bit more aggressively now. But there's going to be no FSD in India, in my opinion. If there is, I'd be very curious to see how it handled. Like, I was just in India in October. I would be willing to bet a lot of money that FSD does not work in India. Like, and FSD's, I've been using it for the past month. It's great. I pay for it. It's amazing. There are some moments where it makes some mistakes and you have to correct it. Like the other day, I was about to turn into a parking lot, and there was a turn before the parking lot that gets you into a highway, and it knew it had to go into the parking lot, and it started making the turn into the highway, and I had to take control. And so now that's one of that's very, very small interventions that I've had to engage in. Like, the far majority of my experience has been non-interventions, but that's a very small thing. I mean, in India, you got cows and dogs, and you got, I mean, I remember in October when I was with my uncle, we were going to get some breakfast, and there was this whole religious, not protest, but march. And there was like 5,000 people. We had to wait in the car for 20 minutes until they, like, India is a different animal. And I don't know if it's going to be easy to work in India. If it works in India, Tesla's a $100 trillion company. Like, if FSD works in India, it is game over. We have achieved AGI at this point. Doesn't it feel weird having to drive now? Yeah. So I was with my sister when we went to Jersey City on Saturday to check out some apartments, and she didn't even want to come with me because she was like, I don't trust FSD, and I was just like, I think you should like get out your comfort zone, get into the car. It's going to be a 40-minute drive. It'll be okay. She was freaking out the whole time we were in the car, but like, it was, we were cool. We were like, it was a 40-minute ride. It was no issues. And we got to our destination. So she finally got to experience it. She realized how amazing it was. She still hates it because she can't fathom a car driving itself. But I can't imagine driving the car, dude. Like, that's a 40-minute drive. I have to take exits. I have to go through all these different tolls. It's like, I don't want to do that. I just want to sit back and think about life and like whatever I need to think about. I don't want to actually have to focus on making the exit. And so it's a totally different paradigm once you get introduced to FSD. And I can't imagine myself going back. But you've obviously got other people that still don't trust it. I just think it's going to be a massive business over time as more people experience it. And now that it's really good, 13.2, I mean, it's not slowing down in terms of the rate of speed it's getting better at. But it's a game changer in terms of actually loving the experience of not having to drive. Tesla will be a social status car, so it's not about FSD. It's about someone who can afford it, and it's a social status symbol. Yeah, that's a fair point. In India, a lot of it is based on social status. Very similar to like buying an iPhone in India. It kind of signals that you're in the wealthier class. So if they do launch aggressively in India, which is what it seems like they're trying to do based on these news updates, I think a lot of people will buy it for the sake of showing off that they have money. But it's not going to be something that allows FSD to meaningfully work. At least not until India cleans up their streets, which is going to be hard with 1 billion people. Okay, let's listen to Jeffries. This is actually one of my favorite analysts, and get his thoughts on what he thinks is going on with this current market volatility. And then we will keep going from there. I mean, what if they were at 0% APR to get rid of inventory because cheaper model is coming? That's a good point. Maybe they're trying to get rid of some excess Model 3s at 0% to introduce the new model. So yeah, that is also a fair point, and that could be bullish for Tesla in the coming months.
In light of yesterday's market sell-off, for insights on mega caps and more, let's bring in Dom Rizzo, portfolio manager of the Global Tech Fund.
Oh, hold on. This is the wrong one. This is the right one. Here we go.
Our next guest thinks the tariff story is massively overplayed in importance. CNBC contributor David Zervos is Jeffries' chief market strategist. David, great to have you on a day like today. Why are we all overstating the impact of tariffs here? What are we getting wrong?
I just think we're missing the bigger picture, Melissa. The bigger picture is the deregulation story and the smaller federal government story and the movement of resources out of an inefficient federal government into a more efficient private sector, the reprivatization of the U.S. economy, as Secretary Bessent has talked about last week. I think that's the biggest story. I know that it can be disruptive. I know that it can take a little bit of a shine off the market as we move those resources out of the public sector and into the private sector, both labor and capital resources. But the longer term picture is just so optimistic for me. And I think we're getting bogged down in a tariff discussion that's just minutia in the grand scheme of things, to be honest with you. I think it is negotiating tactics. It's moved up, it's moved down. It's getting more geopolitical traction than it is actual economic traction. And the real storyline people are kind of forgetting about a little bit, or maybe not. I mean, the S&P is only down a couple percent for the year. So maybe the S&P is seeing through it as well. We're just making a bigger deal out of it than it is.
It's a very sort of intangible or unquantifiable thing, deregulation and the privatization of the economy, David. What makes you so certain that those, and it seems like those are longer term, positive impacts on the economy, that in the meantime, we don't fall into a recession or see economic damage before those good things may take over later on?
Well, Melissa, I think, look, there is a risk that as we do that movement back to the private sector, it's disruptive. And I think the administration would probably like to have disruption early, then they can blame it on the past administration and kind of start fresh 6 months to 9 months down the road at a slightly better place. So there is an argument that they kind of get aggressive early, make a few massive cuts, bring the chainsaws out, et cetera, and we get a little bit of a wobble, and maybe that's what we're seeing. But I think the rate market cushions that. We've already seen a significant fall in rates. I mean, people were talking about 5% 10-year notes and north of that, as well as rate hikes just a few months ago. That doesn't seem to be working out too well. So I think you've got a cushion with the rates. I think you've got an administration that wants to go kind of quickly and early with an aggressive DOGE-style program as well as a dereg program. And I think you could have some disruptions as you make that movement. But the longer-term story, which is what equities should really be keying off of, permanent capital, is just a really positive story. So we're sticking with that. And I like the idea of having rate hedges to your equity positions. I love my risk parity trades. And they've held up great through all of this because we've had the rate rally to go with a little bit of equity weakness. So again, the bond market's cushioning the stock market. That's a healthy position to be in. We didn't have that in 22, and we just barely got back to it in the end of 23 and 24. So
that is a fair point, dude. In 2022, we did not have the bond market that was cushioning the issues in the equity markets. I mean, everything was just going to going with downward momentum in 2022. The bond market was not performing well. The stock market was not performing well. We did have a technical recession, 2 quarters of negative GDP growth. It is a bit of a different paradigm right here because the 10-year is coming down, which is what the Fed needs, or at least what the government needs, what the Trump administration wants, and the Fed also wants that, even if the stock market is volatile. And again, the stock market's volatile, but it's not in a correction territory by any sense of the imagination. We're only down less than 2% year to date. So I think he does bring up a point that the longer term picture for equities and the growth story around AI and all the other narratives that contribute to buying stocks are intact. The uncertainties of tariffs are bad. Labor market data, ISM data, not the best. Tariffs, obviously not the best, but it is not destroying the core thesis to buy equities as long as we avoid a recession. And obviously, as long as the 10-year continues to come down. If that 10-year was spiking towards 4.8%, like we saw in January, with equities and growth slowing down, then we're in the worst situation imaginable. Then we are, in stagflation at that point. But with this much weakness in the economy, and we saw it with the jobs data today, we should be getting inflation to come down, and we absolutely should be getting more rate cuts. The question is how bad of an impact or how bad of a trade-off does that have with equity valuations? Getting a little bit of a dump right now, almost 10:30. Again, Palantir was up 3%. Now it's barely up 0.5%. Tesla goes red after being green. This is really going to stop people from getting excited to buy the dip because you're just going to have no idea if it's a dip or if it's just a ping pong ball that goes back and forth. Hims down 4%. It was down 2%, so that's moving down even further. Abercrombie now down 16%. Robinhood down about 2.3. NVIDIA down about, wow, NVIDIA below 115. There you go. Back down 1%. Yeah, it's a dead cat bouncing down the stairs, dude. It's like we've had like 17 dead cat bounces in the past 2 weeks. This market is an option trader killer. Well, it's an option seller's paradise if you're playing the volatility to the upside or downside. I mean, if you're like on SoFi, right? I mean, if you're selling SoFi puts at this level, it's at 13. If you're selling a SoFi put at 11, you really can't complain if it gets to 11. Like you got to be happy to get those shares at 11, right? So that's a good thing. And then you can sell calls against it at 13 if you get assigned at 11. And if you're selling calls for SoFi at 14 or 15, there's some people out there that are willing to buy those calls, and you're probably making a killing because if SoFi is not going to get to 14, 15, you're just going to rinse and repeat, use those shares to generate income. So there are some stocks that are amazing for option selling, obviously horrible for option buying because they're just not moving in the direction you want them to move in. But if they're range bound, that is an option seller's paradise. Like if SoFi stays between 11 and 14, you know exactly what range to sell your puts, sell your calls at. You just rinse and repeat. And the more it looks like it, the more a lot of these stocks continue to be range bound. I think NVIDIA is still establishing its range, but basically 112 to 118, I would say, has been the short-term range the past couple of days. Palantir, basically 79 to 87 has been the range. Tesla is a little bit wider, around 261 to 290. That one I think is still trying to figure out what the range is, but that has been range bound. A lot of these names, AMD, 95 to 105. I mean, there's definitely still a way to make money off this volatility, but buying options has not been working out. Paul says that's exactly what I've been doing. Well, I mean, there is a way to play the volatility of these markets with selling options. That's why TJ loves SoFi so much. One of the reasons TJ loves SoFi, outside of like the personal reasons he likes it, is because it's great for selling options because he's been able to wheel it successfully for like 2.5 years at this point. Because whenever the people want to buy some calls when it goes green, he sells those calls. SoFi never ends up getting to those levels. He collects all that premium and then he just does it again. And then if it falls lower, he collects those shares, sells calls against them, does it again. So SoFi really has been one of the perfect names to do this on. But it definitively has been range bound over the past couple months, at least as well. Tesla range is 1 to 1 million. It's a coin flip what end it will go to every day. That's funny. Yeah, it's definitely been... Dude, Tesla was at freaking 487, bro. 487 on December 18th. 488. It is down 45%. This is the fastest 45% drawdown in Tesla's history, is one of the stats I looked at yesterday. And now we're back at 271. Like at 487, bro, people were like, all right, it's time. Elon Musk, FSD, robotics, we are going to the moon. And like, no, like we're not going to the moon. We are still at the launch pad trying to figure out if the rocket works. For those that want to build a Tesla position like myself, I mean, yeah, it allows me to at least DCA, but this thing completely went the opposite direction a couple months ago. We missed TJ. Yeah, TJ should be on again. TJ is transitioning his entire Robinhood portfolio to Tasty Trade. That's why he hasn't been on. And when he gets on Tasty Trade, we'll see how he shares it, because it's not really that easy to look at when streaming. So we'll kind of take a look at how we navigate it. But I don't think he's not been doing any trades for like a week, because everything's being transitioned from Robinhood to Tasty Trade. So that is another reason why he's kind of been out of making trades right now. But once he makes a transition, we'll see if we can stream and kind of show off what the new platform looks like. Some of you guys use Tasty Trade. Some of you guys like it. Some of you guys don't like it. I just personally, I like Robinhood, so I don't feel a need to use anything else. It is a little tough when you're streaming it to like see what's happening. So we're gonna have to figure out how we show off the actual positions if we go live with it. Okay, cool. What else do we have? What other headlines do we have? What else do we got? Equities aren't really doing anything. We talked about the labor market. Guys, I had a dream last night. I had a dream about Alex Karp. It's been a while since he showed up in my dreams, but he showed up. It was weird too. And I think the reason I had a dream about him is because we were in this classroom and he was like giving a lecture. And I'm pretty sure the reason I had a dream about him is because towards the end of the night yesterday, I was finishing watching his Barry Weiss interview. And it's a really good interview. He doesn't talk that much just about like Palantir and technology. He talks a lot more about philosophy, like a lot about philosophy. And towards the end of the interview, he was talking about, he was answering philosophical questions by the people that were like poli-sci majors at the Joe Lonsdale University that was in Texas. So, and he was like, dude, last night, I watched about 20 minutes of it. He is inspiring me to start reading philosophy again. Because Karp is someone who has a PhD in philosophy, right? He knows a lot more about philosophy than me. But I know a decent amount about philosophy. I don't have a PhD or anything, but I studied it for a good 5 years. And I rigorously read the texts and the articles and went deep into a lot of these different authors. I want to go back into that. I kind of have stopped for the past 5 years. The last time I seriously was like reading philosophy literature was 2020. And I kind of stopped to like transition my brain into business and investing. And Karp last night inspired me to want to go back and read philosophy. So I think that's like, I think I need to take that up again as a hobby, because the way he was talking about it was just like, it's just like so much intellect. And then he's connecting it with all these real world ideas and he's referencing all these authors. And it's just like, it sounds freaking cool when someone can make a foundational argument rooted in philosophical text and then connect it to the real world. And so I was watching that last night, and then he showed up in my dream. And basically in the dream, he was like giving a lecture, which was very similar to what he was doing on the podcast. But yeah, I want to start reading philosophy. Another day, another glaze. This is why when all of you guys call me an Elon fanboy, I'm like, guys, it's a Karp fanboy. Like Elon fanboy is like, that's just not as accurate as Karp fanboy. So where can I see this interview? Type in Alex Karp fight for the West on YouTube and you'll find it. It's not an easy listen because he goes off on a lot of tangents and he talks about a lot of philosophy. He's not going to talk about like Palantir's government growth or anything like that. It's a much more deeper interview, but it's a good one for anyone who actually cares about that stuff. And so, yeah, I'm going to start reading philosophy, bro. I'm going to start reading philosophy again. Did you talk about the hood giveaway? Yes, we talked about the hood giveaway. We talked about that already. I'll be live on the market close, and we'll see if I can win the quiz show and get some of the million in Bitcoin that they're giving away. That's going to be at 4:45 Eastern. ByteDance is at a $312 billion valuation. That's a headline we're getting right now. So ByteDance raises their valuation to $312 billion. Again, the core part of ByteDance is TikTok. That didn't get banned, so that one continues to uplift the valuation. But that now is one of the most valuable startups outside of SpaceX at 350. So you got ByteDance and what's his name? And SpaceX basically at above a $300 billion market cap. CNBC is talking about Tesla. Let me transition to that. Let's see what they're saying right here. And then we will keep going from there.
Saying he continues to expect Tesla to face a difficult fundamental environment in the near term. And new sales figures are out of Europe, and they're adding to some concerns at least. Let's get over to Phil LeBeau's got more for us on that. Phil.
And David, let's start first off with that Goldman note. Look, they remain neutral on Tesla, the stock, but this is a note basically saying the headwinds are there, at least near term. When you look at Tesla, the delivery of vehicles, the price target, as you mentioned, cut to 320 from 345. Q1 deliveries, they're bringing that down. They're also bringing down their full year estimate for delivery growth, dropping it to 7% from 10%. Weaker demand in key markets. That's the theme of this note from Goldman. And when you look at the sales figures, as we look at annual deliveries that Tesla has put in over the last couple of years, look, in February in Germany, these figures were just out in the last 24 hours, down 76%. February in France, down 26%. Shares of Tesla are still up since President Trump's election. I think they were at 245, 250 when he was elected. They've gone up and they've come back down. And what you're looking at right now is a company that is seeing weak sales everywhere. Norway, down 45%. We don't get the quarterly delivery numbers, until early April. And so we don't have U.S. data at this point, official data. But Sarah, there are anecdotal reports around, and we've seen the reports of people protesting outside of Tesla service centers and also Tesla offices. There are anecdotal reports that we're going to see weaker sales here in the U.S. Now, is it the Model Y because there's a transition there? Or is it overall people are saying, I just don't want to be around the Tesla brand right now, given Elon Musk's involvement with the Trump administration, Doge, et cetera. Hard to separate the two of them, but there clearly is a feeling that in terms of delivery demand, it's weak around the world.
Okay, Phil, thank you. I believe Musk also speaking this morning at a Morgan Stanley conference, so we'll see if we get anything from that.
Oh, Musk is speaking. Oh, wow. That's going to make some headlines. I don't know. Musk was speaking at Morgan Stanley today. That's probably closer towards the afternoon. We'll see what updates he gives on Tesla when that conference happens. So essentially, no one can dispute the European numbers are down year over year. Like that's just hard facts. European numbers, European sales data sucks in Tesla, and it's down, 70% year over year in certain countries. Is part of that due to politics? Sure. I think there's other elements that's hurting it as well, just like the natural hesitation into EVs. We're a little bit of an EV winter. Even Tesla admitted in their Q4 call that more people are picking hybrids over pure play EVs. Obviously, Elon getting incredibly political is definitely isolating people as well. But the European numbers suck. So Europe numbers suck. Margins are probably going to take a hit with the 0% APR. Model Y Juniper is ramping, but we don't know how aggressively it's ramping. Obviously, that could lead to some crappy automotive numbers in Q1. And I think everyone just has to be aware of that going into Q1. Granted, Tesla is down 45%. Maybe that is, where it settles down and we don't have to go back to the 200s. But I think those Q1 numbers are going to tell us what happens. And then also the Austin launch is going to be important. If that Austin launch is not successful, which I don't know if it's going to be, right? We're going to find out. If Waymo's kicking their butt in Austin, again, I'm skeptical of that, but we're going to find out what happens. That's also obviously not going to be good, right? If more people are picking Waymos over Teslas for their robo-taxi rides, who knows, dude? Who knows how are the analysts going to, because FSD's been the thesis. And if the FSD thesis in one part of the country is not playing out against competition, again, I'm skeptical. I think their robo-taxis will be better than Waymos, but that is a risk that I think we all have to watch out for in June as well. Granted, again, if you're buying Tesla, none of those things matter. Like there's like you're buying Tesla for something way out into the future. It's just a question of the entry price you can get and the the cheapest valuation you can get into the name. China sales, yes, China sales are not as bad as Europe, even though they're not amazing. They're still down 30% year over year. Europe sales are down like 50 to 70% year over year, but it's at least better than what we're seeing in Europe. And China just has tough competition, dude. BYD, tough competition. Like it's not easy for them to sell their vehicles and say they have a massive competitive advantage. S&P 500 right here goes red. Palantir is up 2%. SoFi is slightly green. AMD is down 1%, and HIMS now down 2.59% as well. Tesla's the new Bitcoin. It's definitely volatile. I think Bitcoin's still a little bit more volatile, but yeah, it is one of the risk-on assets that is more volatile than not. David, thank you for the $28 super chat. Are there any acquisitions that would make sense for Palantir? Do you think it would make sense for them to enter the hardware market by acquiring Anduril or Figure? Okay, so Palantir cannot acquire Anduril or Figure. Those companies are very expensive. Figure's worth $40 billion, Anduril's worth $20 billion. So there's no way Palantir is going to be able to buy those companies outright, nor would those companies sell to Palantir. In terms of acquisitions, I've never thought acquisitions made sense for Palantir. They have not done an acquisition since 2016. So the last time they did an acquisition was a very small software company. Palantir does all their R&D in-house, which is one of the beautiful things about investing in Palantir. They hire the best talent, they pay them really well, and then they build the best product. So they haven't done an acquisition in over 9 years. I don't think they're going to start to do acquisitions anytime soon. If they did, it would kind of be a red flag for me because they have such good talent. Why do they need to acquire other companies? I mean, if they do an acquisition, it would have to be one of the most elite acquisitions ever because it would take a lot for Palantir to think that they need to acquire somebody versus do it themselves. But I don't think they're in that business. I wish they had an equity stake in Anduril. That would have been awesome. And, that would have been nice a couple of years ago if they did that. But yeah, they did not end up doing that, which is weird because Peter Thiel is leading the Anduril round in Founders Fund. So it would have been nice for Palantir to get a little bit of a stake, but that did not end up playing out. They still have some of the SPACs, but those stakes are also much smaller now as well. Amit, do you see Tesla breaking below 200? No, I don't see below 200. Do I see 250? Yeah, I think that could happen. I mean, dude, if in the next 3 months macro data gets bad and Tesla Q1 data gets bad, I mean, Tesla's still expensive here at 106. If you are a sort of short-term looking at conventional metrics, et cetera, if you think Tesla's going to 10 trillion, it really doesn't matter. But if you think Tesla has to go to 500 billion before it inevitably gets to 10 trillion, then yeah, it does matter. And I would hope 200 is a base. I mean, last time we saw 200 was when the judge rejected Elon's compensation package back in April of 2024. That's when Tesla was back at 130. So, I mean, that would be pretty disgusting if we get below that. Now, granted, the robots can save them. Elon said they're going to ship 50,000 robots in 2026. I don't fully believe him because I think that's a pretty lofty goal. But if they can, that would be a lot of revenue and earnings growth that the street's not factoring in, especially if they price those robots at, I don't know, 50 to 70 grand a robot. But, and then he wants to do 500,000 by 2027. So again, like either they're secretly getting the robots in ramp and it's going to shock everybody when they officially unveil it. Same thing with the Cybercab, or none of that's real. And I guess we'll find out in the next couple of years as well. Figure seems to be moving faster than Optimus. Well, look, in my opinion, I think Figure is moving faster, but that's only because I haven't seen any data from Tesla. And that's maybe because Tesla doesn't want to show what they're working on, right? It's not like Tesla isn't hiring for Optimus. We've seen plenty of job postings for them ramping up Optimus scale in terms of hiring. But we have not seen progress in terms of the videos, which is okay, but it seems like Figure is the only one like showing that progress. Granted, Tesla doesn't need to show the progress. Figure does, right? Figure is a startup that's competing for like their life. Tesla is an established company, so they don't need to show those videos. But I think more people would want to see progress when it comes to Optimus. He said the bot's price point target is 30K or less. Yeah, but that's when they have manufacturing scale. If they're not building more than 1 million bots, I don't think they're going to get to 30K. I think it's going to be priced minimum 50K, if not closer to 100K. They've got to build a lot of bots for that price target to get down to 20 or 30K. And there's no way in 2026 they're going to ramp up manufacturing that hardcore. If they do, I'd be impressed, but I just think it's going to be hard. So I think the initial set of customers would be willing to pay a lot more, but once they ramp up production, they would get those prices to come down. The Robinhood Surprise is a $1 million Bitcoin giveaway. It is going to be a quiz show at 4:45 p.m. Eastern. I'll be live and I'll be participating in the game show. Anyone can if you have the Robinhood app. And so at 4:45, we'll see what it looks like. But yeah, they're giving away $1 million in Bitcoin to do that. Which again, I think it's cool. It's just like more marketing stuff, which is fun and like it keeps people engaged. But we'll see what they do. I thought this was going to be a gold subscriber thing. I thought they were going to give $1 million if you're like a gold subscriber. It looks like you could just be a regular user and you can participate in the game show. CrowdStrike right here down 9%, which also makes me confident if they have $1 million of Bitcoin that they're willing to give away, the quarter is going pretty well. I mean, if you got $1 million that you can give away, it means that you're not that worried about hitting your numbers the first 2 months of the quarter. And you probably think March is going to go decent as well, which gives me a lot of confidence that Q1 is going to be a very strong quarter for Robinhood. And we should see some more momentum. Ori, thank you for the super chat. When do you think Doge will announce a collaboration with Palantir? We talked about that earlier in the day. I don't know when it will happen. I don't know if it will happen. I think there's a chance it will happen. If it does happen, I think within the next couple months, we should get some notice, even if it's not a literal announcement news, but we should see something that's pretty objectively true about a working relationship between Doge and Palantir. I would say the odds are 50-50 right now. I wouldn't say the odds are super, super high, but I also don't think it's like a pipe dream. I do think there is something there. So I think 50-50 is where we got to go if they end up getting a Doge deal. What questions are they asking on the quiz show? I have no idea. Maybe it's about the stock market. Maybe it's about life. Maybe it's about philosophy. Maybe I can answer those questions. I don't know what it is. Vlad is in DC though. Vlad's in DC because the crypto summit is happening on Friday, and Michael Saylor, what's his name? What's the dude's name? Brian Armstrong from Coinbase. All those big guys are at this summit. Vlad is at the summit as well. He tweeted right here, "See you soon, DC." So, by the way, is this a picture from a movie? That's Nicolas Cage, right? What movie is this? Does anyone know what movie this is? But I know it's Nicolas Cage. I have that level of culture. I don't know what movie that is, but he's in DC and he's probably going to be advocating and lobbying to make sure crypto regulations get friendlier, which is going to be important. National Treasure. Is that a good movie? National Treasure, 2004. 6.9 out of 10 on IMDb. All right, I'll put it on the list of movies to watch, which I'm never going to watch. But dude, there's something wrong with my brain and my inability to watch movies. It's bad. Like, it's bad. I'm watching The West Wing, though. I think I'm on episode 9 on The West Wing. You guys are wild for saying that's not a amazing show. I love it, dude. I love it so much. I love that it's in the 1990s. I love that the cell phones have antennas. I love that there's no freaking Snapchat. I love that the Pepsi logos on the cans are like the logos I grew up with. Like, I just like the nostalgia of it, dude. Like, any modern show in today's world has all this technology and it's just like overbearing. I just like the basics of the 90s. I really do. There's something about it, bro. So you're boring. It's not about being boring, bro. It's just about, like, also Martin Sheen, Rob Lowe. I mean, these actors are just like, I can't believe you guys said it's not a great show. Are you watching the show or getting distracted by the background? No, honestly, like, I have it on my laptop. I'm not doing work. It's usually at the end of the day, like right before I sleep. I'll turn it on for like an hour and I actually get through the show. Maybe I skip a little bit during some of the talking scenes. It gets a little boring, but like outside of that, I get through the majority of the show. And I don't know why it's keeping my attention, but it's keeping my attention. Boomers watch West Wing. I guess I'm a boomer then, bro. I like the show. I like it. Something about it that keeps me engaged. Nvidia right here is green, 116.29. Bitcoin 88. Alpha is up 1%. And then SoFi up 0.5% as well. Skipping dialogue is crazy. Dude, sometimes you don't need all that dialogue, bro. Like sometimes it matters. Other times it's just like dead air that they're trying to fill in the show. Like Billions, that's why I cannot stand Billions, bro. I don't know why you guys like that show. 95% of the show is character development. It's not actual action. Like I want to see the guy shorting a stock and then the stock goes to zero and then he has to cover his short. I want to see that type of stuff. They're like talking the whole time. And by the end of season 1, I was just like, what's the point of watching this? Like there's nothing exciting here. So yeah, it's literally only, well, the West Wing is not only dialogue, it's dialogue that's leading to an event, because there's always a new thing that happens in the show, right? Whether there's some terrorist attack or there's some big campaign thing that happens when they're running for re-election. There's like all these different scenarios because they're in the White House. Honestly, looking at the Trump administration and how they're running the White House feels very similar to the West Wing. There's constantly some crazy shit going down and the president has to deal with it, make a statement, press secretary, all this stuff. But for some reason, that's exciting to me more than boring. Worst take on Billions I've ever heard. I think it's the right take, bro. You may say it's the worst take. I think it has at least some level of quality. House of Cards is amazing, but only for the first 2 seasons. The rest of it goes to shit. But the first 2 seasons of House of Cards was incredible. I agree. But then it goes to crap. You need to watch Industry. Yeah, I know everyone says that. I never watch it. I think I watched 5 minutes of it. I got bored like a month ago. I need to revisit it, but I did not watch that one yet. But that one, people say it's a way better version of Billions, which is fair. Okay, what other headlines do we have? Do we have anything else? Or do we end it right here? I don't think there's anything too crazy. Oh, we got Canada. So Canada won't end tariffs unless all listed U.S. tariffs are lifted. All right, so that headline just came out. Canada will not end their tariffs unless the United States gets rid of all of their tariffs. I mean, that's pretty obvious that they would say that. Now, again, Lutnick did say we would get a deal later today between Canada and Mexico. We don't have a deal yet. Maybe towards the middle of the day, we'll see. But that's one statement that's coming up from Canada right here. Oh, here's a chart I want to show you guys. This chart, a little bit more hopium, but it's a chart that I think is, not bad to kind of bring up right here. Post-election cycles, this is how the S&P 500 performs. Take a look at the red line versus the blue line. We are pretty much in trend for how the S&P 500 performs on a year after the election. I mean, so all the volatility that we've seen so far, literally, look at that from January to February. Look at that, like short-term top at the beginning of or end of January, early February, and then massive dump. And then March goes flat from February to March, which is basically what we've been. And then March ends up going a bit more green. April, we get a little bit of dip. That's probably for tax season. And then by June, July, we go much more higher. By August, we top out. We go a lot lower till October. September, that's seasonally in line as well. And then we end out the year with the Santa Claus rally much more higher as well. So, I mean, as bad as the volatility has felt, it's pretty much in line for what happens every post-election cycle. And that's what we're seeing currently right now. So start to DCA heavy March to April. I mean, look, if you use this chart as your proxy on when to DCA and, a combination of the fear and greed index, yeah, that's basically what this chart is telling you. It's also telling you not to buy in August because that's when we top out. And I've looked at a couple other charts similar to this. It's very accurate. August in a post-election year tends to top out aggressively. And then September, October, you get your lows. That September, usually we tend to get, about 2 to 3% down in the markets. And then you have Santa Claus rally. But January to February, which is what everyone's been freaking out about for the past couple of weeks, is very similar to what it's supposed to happen. And this is looking at 57 years of aggregated data. So, or 71 years of aggregated data, 1950 to 2021. So maybe we're just going like we're supposed to be going in a post-election year. All right, cool. I think that's it, guys. We are going to end it out here. Let me do word of the day. Nothing too crazy happening in the markets. Elon does have a Morgan Stanley conference So I will be listening to that, and I'll give you guys updates on what he says on the market close. We'll have the Robinhood giveaway thing happen on the market close, and then we've got Marvell earnings after the bell today, along with MongoDB and Zscaler and Rigetti. So those are what we're looking at after the bell, and we'll see what ends up happening there. For those that wanted to see that election chart, here is the link in the description. You guys can look at that chart right there to go back to it. All right, word of the day. What do we got? Word of the day is dite.
Dite.
To dress or adorn. The warm weather for one calls for one to dite themselves in cool, light fabrics. For their coworker's birthday, they decided to dite her desk with colorful flowers. This word sucks. This is a stupid word. Okay, let's go to a better word. Some of these words have been such L's, bro. It's like, what? Dite? Who the hell is going to say dite ever? Okay, here's another one. Semiotics. Oh, this actually has to do with philosophy.
Semiotics.
Okay, it's not semiotics. It's I've heard this word before. It's semiotics. It is not semiotics. I've heard this word many times. It is semiotics. It is not semiotics. The lady has it wrong. It is semiotics. In philosophy and linguistics, semiotics is the branch of study concerned with the meanings of functions of signs and symbols. There's a really good philosopher named John Baudrillard. John Baudrillard. He's a French philosopher who talks about the concepts of signs and signifiers deeply. And he's essentially dedicated his life to critique capitalism. But the way he critiques capitalism is more of like an internal critique about the nature of how capitalism props something up in order for you to feel like it matters, while at the same time commoditizing it. So basically, there's a famous example here from Starbucks that he uses, which is that Starbucks's pumpkin spice latte in October is not using real pumpkin spice. It is artificial pumpkin sweetener. Like they don't actually harvest pumpkins in September, October, and then use it to make real pumpkin spice latte. But it's branded as pumpkin spice. So the argument here from semiotics is that the pumpkin spice latte is a form of capitalism using signs and signifiers to make people think that they're consuming something that is authentic pumpkins inside of their latte, when in reality, it's all artificial commercialization that's propped up to serve an industry, very similar to the concept of Valentine's Day being a day for love. It's like it's an artificial day, but it props up billions of dollars of flowers and chocolates that people buy. And it's all rooted in semiotics, signs and signifiers. So John Baudrillard has fundamentally dedicated his life to critiquing capitalism, but he critiques it not because there's a Marxist element of the working class versus the bourgeoisie. It's more so this idea of capitalism being a commoditized structure that makes you think that you're engaging ethically in the world, when in reality, the fundamental paradox of business is to become unethical and to lie to you about the pumpkin spice in this example, and then to exploit the nature of how you think about the world. So that's like the best example of semiotics that I can think of. There's actually a really good website on this as well. Let me see if I can find this. Starbucks pumpkin spice latte. This is one of the first examples of semiotics I read back in high school. Where's the website? Right here. Baudrillard. Because this is the one they teach to everyone. Yeah, here it goes. Here it goes. So look, so from September 2014. I'm going to put the link right here in the chat if anyone wants to read it right here. If anyone actually is interested in what I just said about semiotics, it has to do with simulacra and simulation. That's the theory that John Baudrillard puts out. This is a very good, it's like a 5-minute read that explains what he's talking about when it comes to semiotics with pumpkin spice lattes as the example. Okay, cool. Was that enough yapping for the day? Was that enough? If anyone actually cares about that, that's the link. It's interesting, bro. If you care about this kind of stuff, it's interesting. You don't have to agree with it, but it's interesting to have a theory here. Yes, exactly. Kind of like memetics and Giraud. Exactly correct. ET on his philosophy comment right there, 100%. It's exactly like memetics. So there you go. This is mad interesting. Why do I feel like this is sarcasm? Why do I feel like this is sarcasm? Only a Mitt can take a word of the day and turn it into a 10-minute rant. Yes, that is correct. That is correct. Well, at least that word of the day was good, bro. What is dite? Has anyone used this word before? Dite? What is this? To dress or adorn. At least semiotics is like a meaningful word. So, all right, cool. That's it. I'll be back on the market open or the market close. Yeah, we'll talk about earnings. We'll talk about what's going on with Robinhood. We'll talk about the Tesla conference at Morgan Stanley. We'll see if he gives any updates about Q1, and we'll see if we can get a little bit of green real quick. Let's just see how the market's closing or the market's ending out on the open. 85.99 on Palantir. That's a little green. S&P is basically flat, but it's green. Abercrombie still down 15%. MicroStrategy up 3%. Grab up 2%. Robinhood's green up 0.5%. BABA 138. Nvidia 116. So that's a little bit green. SoFi 13. Tesla 273. That's green. And then you got Palantir 8603. That's up about 1.92%. Okay, cool stuff. I'll be back on the market close. Also, a quick thing as well. Thank you guys for showing support on the daily recap episode we've been doing every day. We did episode number 2 yesterday. I'll be doing it Monday through Thursday. I'm really enjoying making this content. Like, I'm excited to make this show every single day, and I'm really, really happy that people are enjoying it because I've been thinking about going in this direction for a long time. Obviously, you never know when you try out a new format if people are going to like it or not, or if they hate it. And so there's always, as a creator, you're kind of always doubting yourself and all this stuff. And so I'm just really happy people like this format, getting a lot of good feedback. I like making it. Like, I really enjoy putting it together and aggregating all the data. I already do it every day in written format, so doing it in video is not a hard thing to do. And so, yeah, I'm happy to do it every single day, Monday through Thursday, and we will just keep rounding out the news as the news continues to pile up in the craziest show on earth, which is Wall Street. All right, awesome stuff. Thank you, everybody. Appreciate you joining the stream every single day. We'll be back for the market close, and we'll keep going from there. Thank you, everybody. Appreciate you guys. See you guys in a couple hours. Bye, everyone.